You're watching TBPN live from the Temple of Technology, the Fortress of Finance, the capital of capital. That's right. Today is Thursday, February 27th, and this show starts now. We got a great show for you today. We're going over Nvidia earnings. We're talking about the spy Sheikh, a man out in the Middle East who's making waves in AI investing. And we're also breaking down Stripe's letter from the founders. Lots of interesting fintech data in there. We're going to have two call-ins today. We got Sean Frank from the Ridge Wallet and Delian Asparouhov from Varda and Founders Fund.
What are they going to be talking about, John?
Sean is actually going to come on and talk about AppLovin. A lot of turmoil in the stock. I think they're down a bunch recently, right? I actually haven't been following that, but he's the expert. That's why we're having him on. And
yeah,
then
I'll pull up the chart right now, but Sean has been a big customer of AppLovin. There's been a lot of attacks against them recently. He's come out in defense of them, saying that, you know, you can say that it's overvalued. That's fair, but it is a real platform. We've driven real results on it.
Sure.
And so it'll be interesting to get his perspective there. I think he spent few $1 million there last quarter. And so we'll get an update there. And then very exciting day for Varda.
Yeah.
I'm excited to dive
Second
into.
re-entry successful. And so Delian will come on and break it down and hopefully give us some color on what's going on in the space economy. And hopefully get political, explain what's going on with DoD procurement.
How to get hopefully deals. Get political.
Oh, yeah. We don't get political. We let our guests get political.
Are welcome to.
Yeah, I don't know. He'll talk about whatever he wants to talk about. Anyway, let's kick it off with a report in the Wall Street Journal about Nvidia's earnings. They beat earnings. They're down today. If you want to pull that up on public, I'd love some extra context, but I'll start reading from this. The chip giant has stayed relevant even as DeepSeek and other reasoning AI models rise. Nvidia faced a growing threat earlier last year. The artificial intelligence world was shifting in a way that invited competition as millions of people started using AI tools. Operating the underlying models to respond to their many queries became more important than the computing intensive work of training them. This is the training to inference shift that we saw happen, and which was expected. You train the model and then you want to actually serve it. And so you got to do inference. This had propelled Nvidia to the top of the AI boom. Many expected that shift could give competitors, including advanced micro devices, AMD, an opening to pry away market share. But Nvidia was already preparing to adapt and stay at the forefront of the AI race despite the shift away from creating models and toward operating them, a process known in the industry as inference. And I love this article because all the killers are here. They got Dylan Patel quoted. They got a bunch of other people that we'll get into shortly. Its latest AI chips, Blackwell, are larger in size, have more computer memory, and use less precise numbers in AI computations. They can also be linked together in large numbers with super fast networking, which Dylan Patel, the founder of industry research firm SemiAnalysis, said led to breakthrough gains in inference. So, bull case for Nvidia laid out by Dylan Patel over at SemiAnalysis. Nvidia's performance gains for Blackwell are much larger in inference than they are in training, he said. Nvidia's latest quarterly earnings report on Wednesday partly reflected its success in adapting to the industry shift. It included sales and profit that exceeded analysts' expectations, coupled with an optimistic forecast for the company's current quarter. Inference has become a growing focus as AI evolves towards so-called reasoning models, where a digital brain thinks through answers to users' queries step by step. That process can require 100 times more computing power, Chief Executive Jensen Huang said on a call with analysts Wednesday. The vast majority of our compute today is actually inference, and Blackwell takes all of that to a new level. We designed Blackwell with the idea of reasoning models in mind. So yeah, obviously when you're reasoning, so many more tokens are being generated, hundreds times more, and so inference is becoming much more important, and Blackwell has positioned Nvidia well to take advantage of that. Got anything for me, Jordy?
Oh, I mean, it's only a company like Nvidia could have an earnings beat and a very optimistic forecast, and the stock trade down 6% the next day, which is where it's at, almost 6.5%. So it wasn't just priced to perfection; it was priced beyond perfection, and the stock price is paying for it today. But let's get into the rest of it, and then I'm sure we'll have other thoughts.
So Colette Kress, NVIDIA's chief financial officer, added that many early developments of the company's Blackwell chips were earmarked for inference work. That pattern was a first for a new generation of the company's chips. Among the companies pursuing reasoning models are OpenAI, Google, and the upstart Chinese AI company DeepSeek, which we've covered on the show. The emergence in January of DeepSeek, which said it had built sophisticated AI models that required fewer of NVIDIA's chips, touched off the significant scare for NVIDIA since the AI boom began. So of course it sold off, then it gained back, and now it's back down.
Speaking of DeepSeek, I don't know if this is in the stack for later, but somebody shared yesterday that they have off hours pricing. So you can basically, it's already extremely cheap.
Yep.
But then off hours, which are their sort of non-busy hours, it's like off another 50%. And somebody was saying, great, we have Temu AI now.
Well, there's a ton of load balancing that does happen in these AI inference models. So Midjourney, when you're in America and you're using Midjourney during your workday, you are likely running that inference in Asia on an Asian server because of the time difference. They're not using it in the middle of the night, and then vice versa. And so that type of load balancing happens all the time. But it is funny how sometimes it seems like the models, if they're under stress, they still work, but they become like lower quality, or there's a bunch of knobs that people are tuning, and it's basically like, your AI worker is getting
just
lazy.
won't try as hard.
Just doesn't try as hard, exactly.
Need some protein.
Yeah. So Wang brushed off that threat on Wednesday, describing DeepSeek's advances as an excellent innovation that AI developers everywhere were taking inspiration from. I think that's true. A lot of those gains will be baked in, but people still want to run them on really big server farms and using a lot of Blackwell chips. Why not stack all the gains together if you can? In the past, Wang has suggested that inference and training will eventually converge as AI more closely aligns with how humans operate. People don't absorb new information and reference it separately. He said at Stanford University last year, you're learning and inferencing all the time.
Great point.
And some of these models actually, it's what's called online learning, where you can continue to train the model even after it's been fully trained. Yeah. So, I mean, obviously there's the pre-training, post-training, but a lot of these models are now what's called online, so they can be essentially updated. And I think that the people that look at AI as, we're kind of replicating the human brain, think about it that way, where there's like fast thinking, slow thinking, all these different models, and you need to replicate all of that.
And humans are fixated on, especially in our corner of the internet, improving your thinking day over day, not in sort of quarterly installments it's interesting because right now people seem very comfortable with the idea of, it would become a lot to process if, Claude 3.5, there's some people today, I saw the Cursor founder sharing, he still prefers Claude 3.5 over 3.7. And people are sort of oriented now around these sort of releases and having like fixed models. But there's a world in the future where they're just constantly morphing and evolving. And I think that is what this point's getting at here.
Yeah, I've seen some diagrams where people have said like, oh, there's too many algorithms now and too many like hacks on top of the core LLM to really call it AGI. Like it doesn't count. It needs to be like one simple algorithm. The algorithm for AGI will be just some simple transformer, and then it'll just be massively scaled up, and that will give us everything we need, as opposed to what we have now, which is like, it has the ability to use a web browser, but that's adapted to it, and it has like ability to look up data and index things. But another way to think about it is like, in your mind, you have the access to go to the library and look up books, and you have the ability to use a calculator. And so maybe we don't need to create an LLM that can do every single calculation from its head. It can just use a calculator.
That feels more like super intelligence, right?
Yeah.
Like closer to the definition of something that doesn't need
anything else,
external references.
Exactly. And it's almost like it's almost like an academic exercise of like, can you just create some super intelligence with a single simple algorithm? Well, it doesn't matter, because really what people want are just agents that do their jobs. And so it doesn't matter if it's
function.
It's, just going and writing some Python and then coming back with the correct answer. I just want the correct answer. So NVIDIA still faces strong competition in inference, industry insiders say. While NVIDIA's advances in hardware and investments in its AI software have kept customers around, a variety of new chips from startups and more established chip makers mean it won't be easy for NVIDIA to maintain its position at the top. Robert Watkin, the co-founder of AI chip startup Etched, I actually spent 3 hours interviewing him last year. Great team. Fascinating team, 2 Teal fellows on that team, and they are trying to build an inference-based chip that's just a transformer baked down into silicon. So those would run much faster, and they've done some cool demos where they've been able to generate Minecraft essentially on the fly, and the only thing that it takes in is the input from the controller. and then it just generates the next frame that you would expect to see. And so you can just play this full game and it's all being generated. There's no game
real
engine.
time.
Yeah, exactly. So
the guy on X, I think Levels.io, he's doing something with flight, like a flight simulator, fully generated version.
We'll talk about that later, but I'm pretty sure what that is he had AI write game engine code.
Interesting.
It's different than
just
generating the video.
Right.
Yeah, exactly. So but similar things. I mean, the pace of all this stuff is really increasing.
With the pace of development, some of these models, you can imagine a future where games are just perpetually generated.
Yeah.
In every possible direction, right? It'll be a totally new experience to play games versus historically there's a map and there's sort of boundaries to the game. And then what happens when there's no more map? Like the map is whatever you can imagine or whatever the game can imagine.
There's no finite levels. Like you can go to ChatGPT right now and just say, tell me a story about a knight fighting for a castle. And then just immediately be like, continue the story. Where does it go next? Where does it go next? And you can do that
or do that with Star Wars.
Pages.
Say pretend you just finished the movie, this movie. Continue the movie.
Yeah, and right now it might get boring, but eventually you could say, hey, make another level for me. Make another level for me, essentially, and do it all in real time. And so he said NVIDIA's chips were fundamentally limited by their origins as graphics processing units adapted for AI instead of custom made for the moment. Sharpening the Swiss Army knife only gets you so far, Watkins said. You have to build specialized hardware if you want to get maximal performance. You're hitting a wall here. And we certainly saw that in Bitcoin mining. Bitcoin was originally mined on the CPU, then eventually GPUs, then what are called FPGAs, field programmable gate arrays, which are like kind of customizable silicon pieces. And then after FPGAs, it went to ASICs, which are the algorithm is baked into silicon. The chip can only run one algorithm. And the algorithm that the Bitcoin ASICs run is the Bitcoin algorithm that just mines. And hugely risky because your
chips yearn for the mines, much like the children yearn for Minecraft.
True. Everything converges to mining in this world. Mining and tokens, crypto tokens, AI, LLM tokens. There's these weird crossovers all over the place. But for the Bitcoin folks, it was very risky because you have to spend all this money to make these chips, and then if the price of Bitcoin doesn't go up, well, you're not going to reap your benefit. Now, a lot of those
or the price of energy goes up.
Exactly. And so it's the same game that we're seeing playing out right now. And Etched is betting that transformer architecture is here to stay, and that AI inference is going to be here to stay. And I think that's a very safe bet. I'm very excited for what these guys are building. Of course, it's a huge task to actually go and build a transformer-based chip and get it manufactured, but the co-founders have some hilarious stories.
It's so interesting to think about the comparison between humans thinking. Just the process of thinking requires a bunch of calories, which is one form of energy, right? Inference, on the other hand, the same level of human thinking is going to require some amount of inference to accomplish sort of the same generalized sort of reasoning process. But it also requires energy. So it'll be interesting to think, like, I actually want to see comparisons of for a human to reason something out, what is the energy cost? What is the comparable energy cost for a machine to do it? I would think that right now it's very possible that it takes more sort of calories in, almost energy in, for the machine to do it. But eventually that could flip. But it might be closer than you'd actually think. But it's an interesting comparison, right?
How many take all the people,
how many
put them
David
in pods.
protein bars do you need to have a good take, right? For you, it's maybe like a quarter of one. Yep. We'll see over time.
Yeah, it really it's the Matrix is basically that story. So he goes on to say a number of startups have begun making inroads among large AI customers. Cerberus, which is a company we've talked about before, they designed the largest chips ever produced, wafer scale chips.
By the way, I love this because everybody's like, we need to make the best, smallest, most performant chip. They're like, no, we're just going to make the biggest one. We're going to try to make the biggest and best chip. Very American out of a French firm.
I don't know if they French. They're working with Mistral.
They're working with Mistral,
and it was interesting because Cerberus, I think they might have gone public, or they became a pretty big company, and they had one deal that wasn't with a company that people had actually like used the product of. It was kind of more of like a hypothetical.
Yeah, Cerberus is in Sunnyvale, so not French, but working with Mistral.
And so they're working with Mistral now to build the world's fastest AI chatbot. So because it's all on one chip, you can inference it very quickly. There's no memory bandwidth to deal with. And so there's advantages to that. Of course, there's a bunch of drawbacks. We talked about this when you're manufacturing at wafer scale. One tiny defect throws out the entire chip, as opposed to if you have a wafer and you're getting 50 chips off of that, if your yield is 49 out of 50 instead of 0 out of 1. And so there have been a lot of risks to that approach, but I love to see that they're trying a different approach and trying to create just a new product that optimizes around a different vector of progress. And so Saudi Arabia's oil giant Aramco is working closely with AI chip startup Grok, which is with a Q. It's a different Grok.
That's a tough one.
It's very tough. And Sambanova Systems to set up large computing facilities for inference. And now the Grok GROQ, they went viral with a demo because they ran Llama on their chip, which I'm not exactly sure. They did something where they optimized for like super fast memory bandwidth, but low total memory allocation or something like that. They made some trade-off. And the result was that you could inference Llama and generate tokens like extremely, extremely quickly. And it would just, how like you're kind of waiting for ChatGPT to load with the GROQ chip, it would just like spit out a full page like immediately. And that was like kind of magical.
When you're so used to LLMs taking a little bit to think and when it happens instantly, it's really shocking.
It's magical.
And it also like the future.
Yeah, exactly. And I'm sure there's that thing about like Amazon, every 5 milliseconds of optimization really matters. And so you could see that really driving adoption. It's unclear if GROQ is like scaling up and successful in all the new models, because some of the new models, they might need, this one needs more memory bandwidth, and it just doesn't work on their chip. So there's always been
interesting
like a fear
when you're looking at a reasoning model, sort of think something out. Right now, it's paced out in a way that it sort of, you can see the sort of chain, the logic chains, and it's more or less as fast as you might think through it if you were knowledgeable on the subject. Yet when it happens instantly, you start feeling a little paperclippy, and it's certainly nerve-wracking.
It is so funny that the first AI thing was clippy, and then everyone's worried about getting paper clipped, and like it's like it all comes back to the paper clips. I wonder if that's where the paper clipper like AI doom scenario came from. Is it at all tied to Microsoft's Clippy? I don't know. What's like the etymology of like the paper clipping thing? I understand the thought experiment that like, hey, you tell it to, it's a good example. You tell it to go make a paper clip, and then it just turns everything into paper clips. Kind of silly, but
I think the origin of this was that philosophers have speculated that an AI task with a task such as creating paper clips might cause an apocalypse. By learning to divert ever-increasing resources to the task, and then learning how to resist our attempts to turn it off. So I think that's sort of the.
But why did they choose paper clips? Is it because of Microsoft's Clippy? That's what I mean.
Oh yeah.
Because they could have said staples. They could have said staples, or they could have said hats, or they could have said.
So it's a 2014 thought experiment by this guy Nick Bostrom.
Okay, yeah.
And so Clippy would have predated that.
So it's
very possible.
I don't know. We got to ask Bostrom. He does shows every once in a while. We should get him on. Ask him where he came up with paperclip specifically. I think that's interesting. I have to imagine that Nvidia is going to drop some kind of inference powerhouse sooner rather than later, because I think they will get eclipsed in that market. He said it may take many years, but I think that's the direction things are heading. And this was Jim Piazza, an executive at IT management company Ansono, who formerly worked on computing infrastructure at Meta. He said that Nvidia might need to take further steps to directly address the competition in inference by developing chips specifically for it. So if you can think about this, like, what is Apple doing in inference? Well, they have, the M1, M2, M3, M4 chips. Those are Apple Silicon. They aren't really wired together in a way where you can do a large language model training run on it. I'm sure you could get it to work if you worked hard enough and you got enough of them. And we've seen some previews of this where like maybe they just networked a bunch of Mac studios together to do some sort of small training run. But it's not really designed to be like Blackwell competitive or A100, H100 competitive. But Google has their TPU, and I think Amazon has a custom silicon chip as well. And so there's a few different hyperscalers that have chips that are specifically, they're like, hey, we're going to do all our inference ourselves. We don't want to pay Nvidia their margins. And so Nvidia needs to keep up with that, cut it off.
Yeah, and the competition for Nvidia is the Groks of the world, the GROQs, right? These sort of upstart chip design companies. But then it's also the hyperscalers, and that is honestly in many ways more risky because it's very difficult for startups can kind of pick a certain edge. But the issue with the hyperscalers is they're the big buyers of these chips as well. So if they start developing their own, that's a huge risk factor. The other thing is in the news this morning, we are the news, but in some other news this morning, Andy Jassy was on, I think it was Bloomberg, talking about Amazon's new quantum computing chip. And so every hyperscaler cares a lot about this category, is innovating themselves here, and in hopes to one day be running a lot of their data centers on their own chips, right, would be the goal.
Cut out the middleman. Well, regardless of what you think about NVIDIA, the best place to invest in NVIDIA is probably public.com.
I would say so.
Investing for those who take it seriously. They have multi-asset investing, industry-leading yields, and they're trusted by millions. Go to public.com for stocks, bonds, treasuries, options, and more.
And treasuries are a great option in this market when everything seems to be in free fall. They rolled that out when interest rates first popped in 2022 and have just continued to ship improvements on it. So good time to have exposure to historically much more stable assets.
Yeah, so go do some research and move some assets over to public. Let's move on to the spy Sheikh taking the AI world by storm. This is a fascinating profile on Abu Dhabi's Tahnoon bin Zayed Al Nahyan. He has more than $1.5 trillion to spend, and he's in a hurry. He's grappling with Mark Zuckerberg. The Abu Dhabi Royal
Your size is not size. You remember that line? I think this was when Luna was crashing.
Yep.
The people were sort of poking fun at the founders. He had this, his company did collapse, but he had a good line in there, which was "Your size is not size."
So good.
People were saying they were shorting, but nobody's size is size when you compare this royal throwing around 1.4 trillion.
Yeah, move over. Massa, there's a new
big dog.
Now
Massa, it's funny when Massa is talking about raising $500 billion. This is a guy that could do it, but he's certainly not going to put 30% of his entire portfolio into one, sort of potentially high risk project. So
let's kick it off. The Abu Dhabi royal, sometimes called the spy Sheikh, is accustomed to using his vast wealth to master his many obsessions, which have ranged over the years from martial arts to chess to video games. Now, Sheikh Tahnoon, the United Arab Emirates national security advisor and brother of the president, is deploying a similar playbook at a much grander scale. He wants to muscle his tiny emirate to the front of the race to develop and control AI systems that could transform the global economy. The world is taking notice. The CEOs of Apple, Microsoft, and BlackRock have all paid homage to his elaborate Persian Gulf royal compound in recent months. We love royal compounds.
Love compounds. I told you before we joined the show, I've been on an absolutely iconic Persian Gulf royal compound in the UAE. I don't think it was this one. There are many. Yeah. There's plenty of space in the desert to put these compounds, but they really are an oasis. The one that I went to had over 100 Ferraris stored on the property.
So many.
It was actually to the point where he would have one F40 in each color.
Wow.
and he'd be like, oh yeah, I like vintage Range Rovers. Yeah. And then he would have the entire rainbow of just one car, same spec, just changing the paint color.
Yeah.
So
it's like the Sultan of Brunei. At one point, the Sultan of Brunei was buying more than 3 cars per day for years, and he wound up with a collection in the tens of thousands of cars.
He was a client of my father-in-law. Actually,
insane. He was making custom cars.
Yeah, he would go and get
Dominator, the precursor to the Bentayga, never sold to the public.
A lot of
Sultan of Brunei just asked Bentley, "I want an SUV," and they said,
"No, there's so many.
We'll make 10."
So there's a bunch of incredible cars that originated because somebody in the Gulf said, "Make me this car."
Yep.
And we can thank them for that. The G-Wagon was the G-Class was developed as a military vehicle from a suggestion from the Shah of Iran.
Interesting.
Back in 1972.
That's crazy.
So
I
it
had no
started
idea.
as an Iranian and is still loved by Persians,
Yeah.
specifically here in LA.
Yeah, whatever Iran deal happens next, we got to make sure that there's some cool cars involved. You
Yeah.
know? Let's
bring it
de-escalate and shift from, you know, the geopolitical jockeying to just who can design a cooler car.
Yeah.
That's the world peace that I want to see
Exactly.
in the world.
Exactly. We're working towards that.
But this guy seems like an absolute boss. He on a fall trip to the United States, he grappled with fellow Brazilian jiu-jitsu devotee Mark Zuckerberg and donned a sweatshirt and jeans for a visit with Elon Musk at Tesla's Texas factory. All of this is possible in part because the 56-year-old Tahnoon controls more money than almost anyone on the planet as the chairman of 2 Abu Dhabi wealth funds with an estimated 1.4 trillion in assets and the steward of an enormous personal fortune. A new artificial intelligence fund he leads, MGX, is set to be infused with more than 50 billion from his wealth and other Abu Dhabi sources. And that's like a drop in the bucket compared to the 1.4 trillion. It's crazy. These numbers are so big now. According to people familiar with the fund, billions of dollars more are set to be spent on AI by Group 42, a company he controls. This is all part of more than 70 billion the UAE has pledged to invest in France and Italy earlier this month. Last month, MGX was one of the few names mentioned backing Stargate, a $100 billion data center project.
Wait, so
at the
how are
White
they
House.
calling this a $100 billion data center project when the headline number just a month ago was 500? Are they dialing it back?
I have no idea.
I mean, it's possible that they basically started the road show
Yeah.
and said, you know, shoot for 500. Even if you miss and land at 100, you're still in a good spot, right?
Yeah.
You're starting to be more competitive with some of the hyperscalers, but definitely dialing it back a full 80%. If I'm assuming that the Wall Street Journal sort of like fact check this and sort of confirm, because for them to just call this, if it was still a $500 billion project and then they're going and calling it a $100 billion project, it doesn't look good on the Journal.
Yeah, I mean, the numbers just go up and down every other day.
Yeah.
Like, add 100 billion, take 400 billion off, who knows? It doesn't matter. And then is it over what period of time? And then Zuck's doing 200 billion over here, and
big numbers.
And Satya at Microsoft is good for his 80 billion, but then maybe pulling that separately, and no one really knows how you're counting this stuff up. But a lot of money's going out.
Yep.
Data centers are being built, and the products are getting better. So they're, the hype is
over
somewhat
here. Saudi Aramco is working on their own project with Grok.
Wow. Yeah. Okay. So it has also written big checks to OpenAI and Musk's XAI and Amazon-backed Anthropic. So he's in all 3 foundation companies.
Good. Why not?
And at that point, I think people are just like, I don't like that you're in my competitor, but who else am I going to go to for 100 billion?
Yeah.
You're the only person. So yeah, you can have a slice of everything. You can create an index.
I mean, it's super smart.
Yeah. Even in a world awash with AI in funds, even in an AI world awash in funds, Tahnoon stands out. While many are plunging tens of billions of dollars into concentrated areas, SoftBank is making a huge bet on OpenAI, and the tech giants are heaving money at data centers. Tahnoon is planning to spend more money broadly around the fledgling sector than almost anyone else. It's a risky time to be splashing so much cash on AI. Citation needed.
Yeah.
Who knows? It might be the best time ever.
Well, so the next, so
is this
they
an
back
op-ed
this
or
up
is
by
this
saying the
news?
low-cost AI model from China's DeepSeek has abruptly shaken assumptions on the need for heavy investment. Got to put them in the true zone here. It's already come out that they spent way more than the headline number that they had, and so at this point, if they came out with a super low number, single-digit millions, and then sort of revised it. And then since then, they've probably revised it again, but the whole sort of world moved on, right? So we still don't know exactly how much it costs, but it certainly wasn't anywhere near the original number that they threw out. I'll keep reading here. Valuations across tech have skyrocketed, and even optimistic venture capitalists often acknowledge the market is in a searing frenzy. Leading AI companies expect to lose billions of dollars for years to come, while pledges of future profitability rest on hazy assumptions of a tidal wave of demand. Many see parallels to the late-stage dot-com bubble when cash splashers of the era... That's a great one.
That's a great one.
Gunslinger, cash splasher.
Cash splasher is great. You got to be a cash splasher.
We gotta
if you're
write
not
that
splashing
down.
cash, what are you splashing?
What are you doing?
Yeah.
So when the cash splashers of the era plunged tens of billions of dollars into building out fiber optic cable networks based on projections that internet growth would be even more rapid than it was, a glut of fiber and enormous losses followed. We've pushed back on this before. It seems obvious that we're in an AI bubble, but at the same time, our leading AI companies have hundreds of millions or billions of dollars in revenue, which the dot-com era companies did not have.
Yeah.
And the actual adoption of AI seems like it's taken place much faster than the internet.
Totally.
And the reason for that is because the internet is the greatest distribution channel for software ever in history, right? You can launch a new model and get hundreds of thousands of users in the same day.
Yeah. I want to give some more color on who this guy is because there's a bunch of fascinating anecdotes in here. It says, from his ornate palace in Abu Dhabi, Tahnoon personally tracks the progress of global large language models on a dashboard his researchers built for him on his phone and computer. He urges subordinates at the giant network of companies he owns to rapidly incorporate AI. So he's probably like pulling up like Chatbot Arena and like MMLU like every day basically and seeing how.
Oh, it's great. It's so much better when you're invested in every single company because Chatbot Arena is just your personal sort of dashboard, right?
Yeah, I wonder what else he's tracking on the progress because it could be like DAUs, right? If you can get that data.
I have this situation right now where I have these two companies in the exact same category that I'm a shareholder in. They're both growing very quickly.
Yep.
They both raised a lot of money. And I just happen to be friends with both CEOs. That's how I ended up there. But it's sort of funny because every other week they sort of alternate between sharing, one person's like, oh, I did this. The other person's like, I did this. I'm like, I'm happy for all of you. It's fantastic.
It's great. I like this one. So Tahnoon was meeting with Satya Nadella at Microsoft. Satya mentions a book by George Washington University professor Jeffrey Ding that suggests AI could be the base of a coming global economic boom. And this is clearly what informed this book. Clearly informed Satya's idea about, hey, let's get to 10% global GDP growth, 5% growth in the developed world. This is what we should be thinking about AI, not reading like the AI doomer books, right? But the Sheikh scribbled it down on his notepad, and soon after, Ding was eating lunch in his Washington, D.C. office when a representative from the UAE embassy knocked on his door and said, I can't find your book in any bookstore. Can I get 2 copies?
Amazing.
Just like send my guy to just like go get the book directly from the source.
We've talked about this before. Billionaires have guys.
Yes.
The middle class
Amazon.
has apps.
Well, everyone has apps.
Yeah.
But when you get to a certain level of like the super billionaire, the trillionaire class. Yeah, I mean, he controls $1 trillion. I don't think he made it to the super billionaire list we looked at yesterday.
I think that guys in his category pay to not end up on those lists.
Yeah, or it's just like they have control over capital, but they don't personally own it, and so it's vague.
Much when you look at the list, all the people are people that you can basically clock their net worth by publicly available
like
data.
Notably
right? So
absent.
You can see, we know how much of Tesla Elon owns.
Exactly.
So when the stock fluctuates by $20 billion, you just look at his share pro rata and you calculate what his net worth did that day.
I think they said there were 26 super billionaires ranging from 450 billion for Elon roughly to down to 50 billion for some other folks. Vladimir Putin, Xi Jinping, not on the list. It's like, how do you not include those guys when they clearly control 50 billion worth of economic power, no doubt. And they're not just, they're around for a couple of years doing the job of president. Like this is their life. Anyway, that is the nature of these things. But I love this guy because I
guess we're having a Zoom difficulty, so I'm going to just keep reading through this, and you can help Connor get the stream back up.
Yeah, read this story about the Age of Empires thing.
Yeah, I'm catching up here. Sorry, folks. So I'm going to backtrack here for a second, but Tahnoon grew up in the shadow of his brother Sheikh Mohammed bin Zayed Al Nahyan, the longtime crown prince who was named president of the UAE in 2022, while his brother rubbed shoulders with foreign leaders and crafted plans to remake Abu Dhabi's economy. Tahnoon honed extracurricular activities. He became so hooked on competing with his brothers in Age of Empires, a video game where players develop hunter-gatherers into powerful civilizations, that he hired an employee from the company that makes the game to coach him on tactics, former employees said. He turned a palace within his royal compound into a gym. He funds one of the world's top cycling teams the UAE Team Emirates, and he rides on an island near the presidential palace he ringed with cycling pass. He likes superlight Colnago bikes so much that he instructed one of his companies to buy the Italian firm that makes him. Incredible. Tahnoon has poured money into building up Brazilian jiu-jitsu and other forms of grappling around the globe. A black belt, he started a well-funded championship tournament that has become the Olympics of our sport, says Bobby Razek, a filmmaker who is making a documentary on Tahnoon and the event. He's definitely one of the founding fathers of mixed martial arts, he said, a sport that, quote, would not be where it was today without Tahnoon. The interest in AI has roots. His interest in AI has roots in the early 2000s when he was so intrigued by computer-aided chess that he hired a sizable team of engineers to make him a program called Hydra that could compete with the world's best players. Erdogan Goons, a computer chess specialist for opening moves, said he often talked by phone for 2 or more hours a day with the Sheikh as they monitored Hydra's games. That's incredible. So in late 2017, Tahnoon's interest increased after he learned that Google's AI program AlphaZero had beaten the world's best computer chess program after needing just 4 hours to learn the rules. It was far more powerful than Hydra ever was, opening his eyes to the power of AI, he told associates. So the following year, he tapped Peng Xiao, the former chief technology officer at software-turned-Bitcoin firm MicroStrategy, to start G42, a company devoted to applications in AI. So it's very cool. He's been very obsessed with this for a very long time. And so at the time, Abu Dhabi's wealth and economic strategy was largely under the control of Tahnoon's brother, Mohammed. As de facto leader of the country, he pushed to siphon off part of the Emirates' oil wealth and put it into investments in economic development, building the wealth fund bounty Tahnoon would later inherit. So the thing that I think people don't fully understand about a country like the UAE is it's almost more of a kingdom that is forced to define itself in certain settings as a country, right?
Yeah.
So when you think about the wealth of the country of the UAE, you should be thinking about it as the wealth of a kingdom, which is controlled by the royal family, right? And there's these families are massive, right? And so you can visualize a sort of family tree. And the closer that you get to the top, the more of the wealth that you control. If you're farther down, you might control some small aspect of the kingdom's operations. You're going to have like a team that works under you, but you're the ultimate decision maker. And so what's interesting is if you want to get big deals done in these sort of kingdoms, you actually have to, if it's a big enough deal, you have to get the sign off of, more or less the king, right? Yep. And so you can see these sort of decision trees that trace up. And that's why, the venture world has had this idea that you can just sort of show up in Abu Dhabi and expect to raise, billions of dollars, like it's some easy task. But if you talk to any large allocator, they'll tell you that these relationships are developed over years, sometimes decades, and you're going to have to genuinely be, invest time into those relationships and ultimately get the sign off of, the most powerful members of the family.
Yeah, I think isn't it like every Emirati gets just like a payment?
Yeah, there's effectively
salaries.
A UBI, so education is funded. Yep. There's enough, sort of a monthly sort of payment to cover a lot of living expenses. This is part of the reason why cars are actually so popular there. One is because it's an oil producing nation, so gas has always been super cheap. There's like an incredible car culture there. Yep. But two, if your education and your house or your apartment are covered and you're working, you have a perpetual income by being a citizen of the kingdom, you're going to spend it on cars.
Exactly.
And it's actually interesting. There's a dynamic, speaking of cars are actually, you would think they would be more expensive in the UAE. They actually end up being cheaper because these cars can't sell back in the States, but two, there are people that use cars to export wealth from sanctioned countries. Let's say you're an oligarch in Russia and you want to get wealth out of the country. It can oftentimes be easier to move a LaFerrari than it is to move $5 million out of the country. Sure. So there's a bunch of cars there that sell below retail and below their sort of market value in the US because people just want to get them into the UAE, move them, and then they have real dollars that are sort of protected within the kingdom. So.
Yeah, I think they were also struggling to set up top tier universities, and so that's where they came up with the idea of like we'll just pay if you go to school in the U.S. If you get into Harvard, we'll pay full tuition for you.
Yeah.
Because like, then it's just
there's a lot of that.
It's
There's a lot of,
as good of an
grow up.
investment as trying to build the next Harvard in the UAE.
Yep.
Interesting. Did you get to the section where they had to rip out the Huawei routers? Do you see that?
No, we didn't get that far.
The UAE has long seen itself as something of a Switzerland, a trusted point for trade for the East and West, and choosing sides on AI would risk damaging relations with China. But the allure of the U.S. lead on AI was too much to ignore. Tanoon picked the United States. Let's go.
Let's go.
And he says, Huawei routers were ripped out of G42's offices and Western equipment put in its place. No more spying. Do not look at our internet traffic, China. While Tanoon and his aides continued negotiating with the administration on details to enable the deal, the administration paired Tanoon's company with Microsoft. G42 agreed to use Microsoft's cloud for AI work and also to comply with U.S. export restrictions as part of the deal, and Microsoft invested $1.5 billion in G42, joining its board of directors. Still, China hawks in Congress remain concerned that the UAE's overall ties to China remain strong, fearing the country could allow powerful U.S. tech tools to make their way to China. Those lawmakers could be an obstacle if Tanoon comes back for similar deals.
Yeah, I mean, the challenge of being Switzerland of the Middle East in many ways is that the UAE does have a lot of economic ties with, from what I know, Iran, right?
Yep.
There's a lot of Iranian money there, Russian, et cetera. But the cool thing about being in the UAE is if you go there, you'll sit down at dinner and you're at a table with it's the most diverse group of people I've ever been a part of. I got a chance to go a couple times in, early and then late 2023. And you'll sit down at a table with somebody from Iran, somebody from Israel, somebody from Russia, somebody from the UK, an American, and everybody's getting along because everybody's just generally there to, in that setting, enjoy F1 and, everybody's, generally pro-business there. So it's a great environment.
Yeah. I mean, the capitalism in business has been like the one thing kind of holding the Middle East
universal
together
language
with the UAE and Saudi Arabia kind of playing nice with both sides and kind of keeping everything together, and a lot of pressure to not let anything fall into just absolute chaos, which is obviously risky. So speaking on a podcast in December, they're talking about Jared Kushner, recalled a 2018 meeting when he was visiting the region. Tanoon told him, Jared, I'm not meeting with you unless you spend 2 hours after with me to talk about AI.
Wow.
And so he's trying to build his...
He's going
network.
podcast mode. He's like, you got to talk to me for at least 2 hours. The shortest Joe Rogan episode.
Yeah.
And we'll get into the details.
That's great. And so, he's been investing in a lot of stuff. And I'm sure he'll be someone
got to have him on the show.
Whose presence only grows over the next few years as he continues to make big investments. Anyway, if you're looking to take a trip and stay in a nice place, maybe impress a Sheikh while you're on the fundraising tour, we recommend going to Wander.
That's right.
Find your happy place, book a Wander with inspiring views, hotel-grade amenities, dreamy beds, top-tier cleaning, and 24/7 concierge service. It's a vacation home, but better. And we have some big news from Kyle over at Wander. They just crossed 600 total locations. And you were in the chat asking, weren't you at 500 a month ago? I said yes.
Yep.
It's pretty great growth. 20%
the growth is
month
insane.
over month.
It is incredible. It's amazing. And what's cool is Wander is a platform where every incremental property makes the platform more valuable, right? I think that, we dealt with this before. I was trying to stay at a Wander in when the fires were happening. They were all booked. I'm sure, they've added multiple properties within Southern California, and the pace that they're operating at is just incredible. So go check it out. They actually are running a spring sale for the last day today that you can get $400 off, plus a Wander hoodie with code SPRING400. So go check it out, and you won't regret it. It is unbeatable. And we are going to be staying in at least one Wander in early March, and very excited to record a podcast. We'll have to do the show from the Wander because their Wi-Fi is so fast. It makes it all possible.
Live stream it. That's great. Well, let's move on to an analysis by Sheil Monat, breaking down Adyen and Stripe's 2024 annual reports. They both are out, and so now you can benchmark these two companies against each other. Adyen processed 1.34 trillion and was up 33% year over year. Stripe's growing faster at 38% year over year and is now at 1.4 trillion. Adyen's valued at 56 billion, public company. Stripe is valued at 91.5 billion. And in terms of employee count, Adyen has 4.3 thousand employees. Stripe has 8.2 thousand. They're both profitable. Adyen EBITDA of 1 billion. Note, Stripe has higher margins. And so this comes to us from this wonderful Stripe community letter that we will read some of this stuff, but it highlights a lot of interesting applications for the company, and we'll go through some of the highlights here. So
yeah, the big thing that stood out to me from Shield's analysis, everything, the two numbers that jump out. One is Stripe is almost double, valued more than double.
Yep.
And Stripe has almost double the number of employees, right? So anyways, there's the big story here is how is Stripe worth twice Adyen despite having less EBITDA and twice the employees and all these things. But the letter here is fantastic and just shows the level of and the leadership that Stripe has with the Collison brothers.
So their Stripe's mission, of course, is to grow the GDP of the internet, right?
Yeah, fantastic.
And payment volume represents 1.3% of global GDP now. That's
insane.
Absolutely insane.
It's one of those things like they could have said, hey, over time, we think the internet's going to grow a lot. We think internet payments are going to be big. We think we can actually get 1% of the global GDP running through. And it's the most ridiculous number insane, because every founder has thought about a world, if we just get 1% of this market, we're a multi-billion-dollar company. Stripe actually did it. And an example of one of the most hyped companies of the last 20 years living up to the hype, right? With the way that they're growing, there's a world where there is a scenario where they have double-digit percentage of global GDP running through their rails, which is just obscene.
Yep. Stripe billing alone is on a $500 million revenue run rate. We use Stripe billing. Over 300,000 companies are on Stripe billing. And Stripe was profitable in 2024 and is expected to remain so in 2025 and beyond. And of course, they were one of the companies to kind of move quickly during the last downturn and kind of, I don't know if they had to lay a lot of people off. I think they actually mostly just froze hiring and kind of grew into their valuation, and it set them up for profitability and then kind of scaling from there. So they kind of know what the base, how the business operates, how it runs. Obviously they're very big and they can kind of grow into their valuation. Nearly 200 million active subscriptions are managed via Stripe billing. Stripe is trusted by half of the Fortune 100, 80% of the Forbes Cloud 100, and 78% of Forbes AI 50 companies. 1 in 6 new Delaware corporations incorporates via Stripe Atlas. Yep. That's crazy because I always thought of that. There was Clerky years ago, and those products, they're very easy to get, popping in like small Silicon Valley crews, but you don't get to 1 out of 6 without being
it's
like a mainstream product.
The dynamic with Stripe Atlas is fascinating because it doesn't seem like they do a lot of independent marketing. It seems like a product that Stripe built truly for the community. It was it makes sense. It's a perfect wedge product for payments, right? What do you need to do before you can accept payments online? You need to have an entity. They built what I think is the best way to create an entity online. We used it for TBPN. It's a fantastic product. It's still super simple, despite it being a relatively complicated process to create an entity. The product is fantastically simple, and it's turned out to be an amazing wedge product for them, just given the scale.
Yeah, and it's got to be a hard product to advertise, right? Because you only incorporate once. And not everyone's incorporating it all the time, and it's not like I'm sure they're all over Google Ads and stuff for when people are thinking about incorporating. But outside of that, it's hard to do a lot of awareness for that product. But they've done a very good job at getting penetration there. Hertz, and they give some case studies here. Hertz increased 4% of online payment authorization rates after switching to Stripe. Turo saw a 4.7 boost in recaptured revenue, translating to an extra $114 million per year. I had no idea Turo was that big.
Wow.
That's huge. Intercom improved conversion rates by 2.1%. Forbes saw a 23% revenue uplift within 6 months after switching to Stripe. There's a ton of examples of this. Major AI companies, including OpenAI, Anthropic, Midjourney, 11 Labs, are Stripe partners. Stripe's agent toolkit and virtual card tools enable programmatic spending and control. More than 14,000 vertical SaaS platforms utilize Stripe's payment services. I mean, it's just like the default in Silicon Valley, at least. Stripe Capital provides fast funding with funds arriving in under 48 hours. So they've really like just built every possible fintech product on top.
Yeah, and if you look at the actual
like 3 lines of code, 7 lines of code.
I have to try to pull this up, but if you look at their product timeline, there is a pretty amazing, you can actually see, I wish we could pull this graphic up, but it's going to be difficult. But they basically come out in 2010 with payments.
Yep.
2 years later, they launch Connect.
Yep.
4 years after that, they launch Radar and Atlas. So this entire time, they're just focused on making this perfect payments product, right? And to show that level of patience, even when they had sort of exploding growth and traction, and many operators would have said, hey, we should go multi-product. We have all this traction. They waited, and then since then, starting in 2016, they really ramped up the pace. They launched Atlas, Radar. 2017, they launched Sigma. 2018, they launched terminal issuing billing. 2019, Capital, as well as corporate cards. And the infrastructure to issue corporate cards. And then in 2020, they launched Treasury as well as Climate. And then they launched a tax product in late 2020 as well. So the velocity went from, hey, let's just have this sort of narrow focus and really own payments. And I think that Stripe is one of the best examples in history of focusing early on really, really directly on startups as a category.
Yep.
And they sort of ignored the enterprise pretty broadly, but they benefited from between when they started in 2010 and where they are today. Many of their early startup customers became public companies that are now massive. And those were, customers that were able to prove out these use cases that would, go on to allow them to, sign companies like Hertz, right?
Yeah.
Which is this legacy company, or Forbes, things like that.
I remember Shopify. When Shopify started, like the default payment integration for a long time was Stripe. And you kind of bring your own Stripe account, and then they were doing Shopify payments, which is kind of a white label Stripe account, but it was all Stripe under the hood. And they've just really, really benefited from just letting the internet grow and being like the index on the internet economy. Interestingly,
a good example where the mission of the company, grow the GDP of the internet, was truly, truly aligned to the potential of the business itself, right?
I thought this was interesting. They mentioned the Bridge acquisition. Transaction volumes in stablecoins doubled from Q4 2023 to Q4 2024, and Stripe now supports 40 million monthly active stablecoin wallets.
Wow.
And that's something that like they've been talking about crypto for a long time. They've integrated crypto products in the past, but like the stablecoin thing feels like the first time that stuff's like really taking hold. And I know I saw Packy.
They made the Bridge acquisition. They spent over $1 billion on it specifically because of the developer activity that Bridge had.
Yeah.
So they, I think, saw a younger, they saw the stablecoin version of Stripe, which had early developer traction. It was a product that developers loved. And then all of a sudden, public companies are using the product.
And so they write stablecoins, room temperature superconductors for financial services. Top stablecoin uses today involve tangible real world activity. CFOs use stablecoins to manage corporate treasury. Immigrants use them for remittances. Citizens of countries with unstable currencies use them for dependable savings, and payment teams use them to enable customers from countries with low card penetration. Some of our favorite examples: SpaceX uses Bridge to repatriate funds from Starlink sales in Argentina, Nigeria, and other markets. Dollar App, a neobank in Mexico, uses Bridge to help individuals receive USD payments from payroll providers like Deal, and AirTM uses Bridge to disperse payments to workers all over Latin America. So as we start paying more people all over the world, the stablecoins make a ton of sense. I've actually paid people in stablecoins before, because they've been in countries where getting them US dollars was very, very volatile, delayed and super high fees. And so,
and to be clear, there was a lot of analysis of the Bridge acquisition at the time where people said, how could they pay 100? It was like more than 100 times revenue. It was a really big number. And the obvious answer is that Stripe has over $1 trillion of volume. They're big believers in stablecoins. They had their own internal efforts. Why not spend $1 billion to acquire the leader in the space and then focus on integrating it with all of your existing customers. So I think we're going to see over time that could very well be an Instagram style acquisition for Stripe, in the sense that you can imagine the Bridge product, 10 years from now having, hundreds of billions or potentially even trillions of dollars in volume.
Yep. And I like this. We've been seeing this AI growth chart all over the internet, and Ramp or Stripe, Ramp's done some analysis on this, showing adoption of AI tools. On the corporate card side, Stripe's seeing something similar. They say, we're seeing an AI boom on Stripe. We're partnered with a large number of companies with rapidly growing businesses, including OpenAI, Anthropic, Suno, Perplexity, Midjourney, Cognition, 11 Labs, Langchain, Pinecone, Mistral, Cohere, Sierra, it's so many of these. And the median time to annualized revenue milestone for the top 100 AI companies on Stripe in 2024 was 24 months. They compare that to back in 2018. It took SaaS companies, the top 100 SaaS companies by revenue, 37 months. Wow. And so they're providing extra data to show that the AI boom is real, and companies really are accelerating their revenue growth faster than in previous in previous waves.
Yep.
And so Cursor, the AI-powered coding assistant, raced to over 100 million recurring revenue in just 3 years. We're also seeing the likes of Lovable, which hit 17 million ARR in just 3 months.
This is wild. So Lovable, for those that don't know, is a Swedish company. Harry Stebbings, fellow podcaster, was one of their early investors, and Lovable doing that in 3 months just puts so much pressure onto every other company because that's now the bar.
Yep.
I remember in 2021, the narrative was you should be able to hit 1 million of ARR in 9 months post-launch. That's now seems childish in comparison.
Try 10 million
in the
cage,
months. We're trying to hit 1 million in 3 months. But anyways, the demand for these AI products is insane. And I believe Lovable has more ARR or is at a much greater run rate than Booking.com was when they went public.
Really?
Yeah.
Oh, yeah. I think we dug into that during the Dara Khosrowshahi and that Mary Meeker article when she took them public. Yeah, I remember that. There's an interesting point in here. Some people have called these startups LLM wrappers. Those people are missing the point. The O-ring model in economics shows that in a process with interdependent tasks, the overall output or productivity is limited by the least effective component, not just in terms of cost, but in the success of the entire system. In a similar vein, we see these new industry-specific AI tools as ensuring that individual industries can properly realize the economic impact of LLMs, and that the contextual data and workflow integration will prove enduringly valuable. So they're bullish on these quote-unquote wrapper companies, which I thought was interesting. Anyway, let's move on to tell you about another fintech company that we love here on the show, Ramp. Go to ramp.com. Time is money. Save both. Easy to use corporate cards, bill payments, accounting, and a whole lot more all in one place. Go get to know Ramp on ramp.com.
Okay, so speaking of Ramp, we have a major Ramp customer, Sean Frank, who's going to be joining the show in 2 minutes.
Fantastic.
So I'm going to text him right now, and we'll get him on here.
Well, we can do this one DM that we got in the meantime. It says, "Ahoy, John. Hope you're doing well. Apologizing for hitting you with a bunch of questions, but I've posted 50 blogs and I have 4 subscribers. I'm not gaining not that gaining subs is the goal, but still. I've talked to family members who collectively hired thousands of people, and they're out of ideas too. The whole add value and it will come approach just hasn't worked. I want to work with smart people before going out and building something on my own, but I'm not sure what the move is." What do you think, Jordy?
So I think that one of the things that seems very obvious with content is that you need extreme levels of patience.
Yep.
That's not an excuse to not refine the product every single day.
Yep.
And we take this approach. We're lucky to be in a position where we have a daily show. We're trying to improve the show, and every single day. There's some days where maybe we're underprepared. Some days where we sort of miss a segment that we wanted to do. But in general, trying to improve the product every single day, and then improve how you're distributing that product.
I think it's the distribution. So I posted 50 YouTube videos before a single one went viral. For me,
that was over a year.
It was a full year. I posted them once a week for a full year, and it was like, oh, I got 100 views, awesome. Oh, I got 1,000 views on this, that's great. And then finally, one got picked up about SpaceX and the algorithm. It went to 70K views, and I remember seeing the chart go up, and I was like, wow, this is amazing.
Yep.
But it's really hard for blogs to go viral.
Yep.
Because there's no algorithmic
discovery
recommendation. There's no discovery.
engine.
And
Yep.
so what you should probably do is figure out, can you repackage this in terms of just a long post on X
Yep.
or a thread? Or because a thread can go viral, short form content. If your natural voice is on short form video, make 1 minute videos. Break your blog post up into a series of 1 minute videos. Try a bunch of things, and then very quickly the algorithm will start sending you the signal of like, this got 10 times as many views as that. What did you do differently? And you can introspect. But it's very hard when you're just hanging out on a dead Substack with no traffic coming to it.
Yep.
That I think that's very hard. And I think the people that have been successful on Substack have built audiences elsewhere. Like Ben Thompson talks about Stratechery would not exist if not for sharing links on Twitter and LinkedIn at the time.
Yep.
And now he's got it cornered and people share it and his stuff goes viral even if he doesn't post it because people will say, oh, there was a great interview. We got to talk about
we'll
this.
cover it.
Exactly.
Yeah, I think the main thing is YouTube specifically, as well as some of these other platforms, can be very demoralizing.
Yep.
But that doesn't necessarily, the X factor now is that the algorithms need time to learn your content before they figure out the right people to distribute it to.
Yep.
So
do we have Sean on the line?
We have Sean on the line. He's in the waiting room. Let's bring him in. We're going to talk with Sean about AppLovin. And Sean is one of the sharpest minds that I know on e-commerce. Actually, I'm going to go ahead and say,
hey, Sean.
There he is. Mr. Ridge himself, Mr. Wallet.
You guys are in person. I was expecting you guys to be doing Zoom yourselves, but damn, IRL. Love to see it.
IRL.
Always. Unless you're dealing with this traffic in LA these days, Sean. If you want to leave your house now in LA, it's about an hour to go anywhere. Are you still going into the office in Santa Monica every day?
No, I went yesterday, and yeah, it's like an hour and a half, bro. PCH is still closed, so yeah, LA traffic, bud. Can't beat it.
Well, tell us about AppLovin.
Yeah, so AppLovin, for some backstory for the audience, founded in 2012. Okay. Really started to, it wasn't even necessarily a company I feel like that was on the map for a lot of people until last year. I think last year was the first time you guys started spending money on the platform. Is that correct? Or had you tested it at earlier points in Ridge's history?
Yeah, so I think AppLovin has 3 discussion points. Mm-hmm. We'll go from what I'm least qualified to speak on to what I'm most qualified to speak on. So
perfect.
Least qualified. Short reports are coming out that they're violating, App Store terms of service. Their ads target children, all this type of stuff. What AppLovin is there's 2 sides of the business. They run a bunch of mobile ad space, so games, mostly games, but whatever old people are playing on their phones, they have that sort of ad space, and they have an ad engine. Right. So like they're the ad exchange, think of like a Trade Desk or Google Display Network. So they run both sides of those. They've never done e-commerce. Their e-commerce push was like August or September 2024. So we're like 6 months ago.
And the majority of their, just question. So the majority of their customers until they push into e-commerce were other mobile games, I'm going to guess, and other sort of digital apps, services that they were pushing people to. Do you have any idea of what their customer base looked like until last year?
Yeah, I think it was all mobile games. So, they've been called like a pyramid scheme, all these type of things. So you're a mobile ad engine where other mobile games can run on top of, right? I think they also do like display branding, like trying to get you to go to the movies or just like real top of funnel campaigns, nothing conversion optimized, right? Mm-hmm. Now, a lot of people spend a lot of time on mobile games, so there are a lot of ad units available, but it's something Ridge has never touched at all, right? Mm-hmm. Like we're mostly a Facebook advertiser. They get some years 75% of my budget. We do influencer, that type of stuff. We've never really done that much in the world of display, and especially nothing in mobile display, right? The industry does have a bad reputation. Mobile display ads are just like, that's where click fraud exists.
Yep. Well, and from my understanding with Ridge, having worked out of your guys' office and worked on the Ridge business myself back in the day, you guys had a policy where you'll test any channel once, but you're very, very ruthless with pulling back that spend if it's not working. So I remember Connor being who's the CMO of Ridge, being willing to test some obscure ad network and being like, yep, doesn't work, almost like the same day. oftentimes. So when you guys decided to test AppLovin and then actually start to really spend on the platform, I think that sent, a real signal.
Right. Well, I'll say that we're a very sophisticated advertiser, right? For people unfamiliar with Ridge Wallet as a business, I mean, we'll spend over $100 million this year on digital advertising, right? So that's everything from LinkedIn ads to TV ads to influencer to Reddit to Snapchat. Like Meta is the biggest, best game in town. They might get 70% of my budget some year. Sometimes they get 30% of my budget. But like outside of them, we're spending money on every single possible channel we can. So what are the accusations against AppLovin? I'm going to put the unverifiable claims that I cannot speak to in one box. And that is there's short reports saying that like, they're doing one-click forced downloads, they're tracking users, whatever. Cannot speak to that at all. Like if that's true, let's hope there's an investigation that we don't want them targeting children with inappropriate content. So I don't know anything about that. The second thing is the stock price has gone parabolic in the past like 2 years or whatever. I think they IPO'd maybe in 2021. I think it's up 4x in the past year. At one point, it was worth more than Uber. So as soon as a company is trading at 100x revenue and is worth more than Uber and no one's ever heard about them, people just get immediately freaked out, right? It's like, they had the same revenue multiple as Palantir, right? Palantir's been around a lot longer. People know about Palantir. So
yeah, just for some extra context, so they were worth 3.8 billion at the end of 2022. At their peak, just a little bit ago, they were worth 160 billion. So
okay, yeah, it's
generational huge run.
Yeah. And anytime that happens, I mean, a lot of people start speculating, right?
Yep.
Revenue's growing really, really fast. I'm not a stock trader. I fucking buy ads. So is the company overvalued? It's about as overvalued as Palantir is. So depending on where you land on that side of the conversation, that's why there's so much interest right now, right? The thing that I'm qualified to speak to is as an advertiser, they shoot us an email in August and they're like, hey, we're rolling out e-commerce. We'll give you a lot of ad credit to test it, right? And we get ad credit from Snapchat to test stuff, from Reddit to test stuff, from Meta to test stuff, and free ad credit, even if it's the shittiest ad space on earth. I mean, okay, yeah, I'll get some bunk ass impressions, whatever, right? They end up, it ends up working really well. I probably spent $4 million of my own money on AppLovin ads in Q4, and I was spending 250 grand a day. It was matching Facebook ad spend, right? So one of the short reports is saying that like, oh, they're stealing Facebook's data to be able to target these people so good. Once again, I don't know how the fuck that would work, but what I will tell you is that as a sophisticated advertiser who tracks everything via Northbeam, via incrementality holdouts, via post-purchase surveys, coupon codes, people were playing AppLovin games, seeing Ridge Wallet ads, buying those products, and then telling us they saw it on the ads. So it's a real ad channel. It really worked in Q4. I have an invoice right now. I owe them $1.5 million that I have to pay by the end of the month. So like, it's a business. I don't know what to tell everybody about the shorts. Now, do I think the company's overvalued? Yeah, I don't own any of the stock. That's fucking insane. It's like it's a company, it's a mobile app platform. What do you mean they're worth more than Uber? Like I fucking call an Uber every day, right? I don't play any mobile games. So that's like the stock price question. Then it's like, oh, all of this nefarious, whatever, inside dealing, subsidiaries. I don't know anything about fucking that. What I'll tell everybody listening, and what's so weird is I'm public. I'm on Twitter. Like I post my ad spend on these channels. No one's reached out to me. Like none of the shorts. I'm like, guys, I'm around. Like I'll show you the fucking AppLovin platform.
Get on, make them pay for it. Don't give up the sauce for free.
Yeah, you got to go on Tegus, become an expert consultant. You can make $1,000 an hour.
Yeah, dude, like I have no dog in this race. I'm like, yeah, dude, whatever. It was an ad channel. If they went away tomorrow, I would spend money on Snapchat or TikTok or anywhere else, right? But like the verifiable proof is that I gave them real money. It was a good ad channel. And I think the reason why people like their revenue is growing super fucking fast, right? The revenue's up 80% year over year. And they're like, yeah, we have $1 billion run rate for e-commerce advertisers in December. And I'm like, yeah, no shit. I spent fucking $1 million. You know what I mean? It's like, yeah, I spent a ton of money with you guys. Like, it doesn't take too many people like me spending that to get really, really high revenue. Dude, ads are the best business on earth. I don't know why this is so surprising for people. Now, are they compliant? Do they owe Apple money? Are they stealing data from Facebook? I don't fucking know, but pretty good ads. You got any questions about that?
Pretty good ads.
Pretty good ads. Can you talk about the relationship between AppLovin and Flip? Has Ridge had any success on Flip? I remember Flip blowing up out of nowhere. They were giving a bunch of credits to basically give away products for retailers. I know they have an ad partnership. Have you found any success on the Flip platform?
Yeah, so I've never used Flip. As far as I know, Ridge has never worked with or advertised on Flip. It would be a surprise to me to hear that my ads were on Flip via AppLovin. I've had friends who've had very bad relationships with Flip, so I've always avoided it. And our products don't work for live shopping anyway. Like TikTok shops, it doesn't really work for us either. And it's because of like, we have a very male focused demo. We're more of a premium product. Those typically live shopping works for like, leggings that make your butt bigger and that type of shit, right? Like it's not our core product that's crushing it on there. That whole affiliate GMV world is very, very dark and shady. I know a lot of people who are doing weird stuff there. You can check out the affiliate top charts, like what Goalie's doing. They're giving people fucking mansions if they, hit GMV targets of $1 million. So yeah, I don't know anything about Flip. I've never used Flip. They email me all the time. Even an idiot like myself, I'm like, that looks like a pyramid scheme. I'm not gonna hang out there. But dude, I have the data on AppLovin, right? Like 85% of our traffic from AppLovin came from iOS devices, right? Like one of the concerns is that like, oh, this is just bot traffic on Android devices, like click farms in Bangladesh or whatever, right? It doesn't look like it's that. So I don't know how they have good quality iOS traffic coming through. It all seems to be games called like Toon Blast or some shit, but like, anyway. Old people bought Rich wallets. It was pretty cool.
Well, yeah, the reason I wanted to have you on is there are major brands out there that will run on an ad platform that's just sending them bot traffic, and they won't even necessarily turn it off because to them they're just optimizing for impressions and clicks. And Ridge has always been a company focused on the end actually conversion, right, and sort of building your guys' engine around that. What happens, shifting the conversation a little bit, what's your outlook on e-commerce in our year 2025? We covered maybe a couple weeks ago, we talked about how the whole Amazon, it's a terrible time to be an Amazon seller. It's been a tough time to be a Shopify brand as well with all this sort of tariff action and things like that. Historically, Ridge has made a bunch of products in China. It's shaping up to be a rocky year for e-commerce broadly. It helps to have a fantastic brand like Ridge, but what's your outlook going into the rest of the year?
Oh, dude, just take it day by day. I mean, there's more tariffs announced today. There's more supply chain disruption. And it's not just the US government. Like every government on earth is becoming more protectionary. Like Section 321.
Sorry to interrupt, but we had Ryan Peterson from Flexport on yesterday that said that was talking about the actions that Mexico had taken around what's not the same as the de minimis loophole, but I'm forgetting the right name for it, but to sort of protect Mexican textile workers. So yeah, a lot of action.
Yeah, and like we like to think about this very one-dimensional. Like Americans importing things from China cheaply, but like that fucks over other manufacturing economies like in Mexico. They don't want fucking cheap auto parts or cheap apparel coming from China, sitting in their warehouses, going to America duty free. Like everybody gets pissed off in that. So yeah, that happened yesterday. The quick summary is just take it day by day and try to survive. Don't have any debt if you can afford it. Keep a lean team. I think D2C 3.0 is like incredibly lean teams. Like Ridge is down to 60 US full-time employees. We're doing more revenue than ever with less people than ever. And I think that's going to be more of the trend. And Yeah, I mean, if you can bring stuff to America, you should. I mean, we're probably 8 months away from 60% of the wallets being made here. So I'll keep you guys updated when they start getting made here.
Where's your new
Fantastic.
factory going to be? Or where
So,
you onshored some manufacturing, that's been a long-term process, but what does that look like?
I mean, yeah, it's all component part manufacturing. So like we have inner plates that are going to be made in Missouri, and then they get shipped up to Philadelphia to be finished, and they get shipped to Arizona to be assembled, and then they go to fucking Kentucky to sit in the warehouse. So this is one of the challenges. China very strategically has everything within like a 1 hour radius when they do like,
Yep.
these industries. Uh, but with tariffs today, I mean, it's 85% on aluminum goods coming out of China. So it gets very close to the same price now. So I think that's why he's doing it.
Wow.
Wow. Well, thanks for stopping by. Appreciate the update.
Love the take, Sean. You will be
A regular.
A regular. Welcome to the show, and
Dude.
thank you for posting your heart out every single day.
Yeah, dude, I'm the number three, the best guest you guys had so far.
Yeah, we'll give you
I'll leave it
we'll
there.
get you an NFT just for
There you
you.
go. Bye.
Thanks,
Bye.
thanks, Sean. Talk soon.
Cool. Well, Delian should be joining any minute. I don't know if he's in the queue yet, but
Quick backstory. So Ramp sent Ridge a
Yeah.
plaque for spending $100 million on Ramp. So putting up some huge numbers. And Sean is an absolute animal.
it's great. Well, let's see. Is Delian in the queue? Not yet. Okay, I'll text him, and let's move on to Michael Mignano. He says, people are still wondering why every single podcast is pivoting to video. And it's a result here that says that 1 billion people are watching podcasts on YouTube every month.
Yeah, it makes sense. I mean, if you think about it, Rogan really led the charge here. I feel like he had such a massive audience on YouTube, and so much of the attention that he would capture was YouTube oriented. And you remember there was a period where Rogan's influence and attention fell off a cliff after the initial Shopify deal, and you could feel it almost ramp back up again as he went back on YouTube. So massive platform. One of the biggest reasons for this is obviously that podcasts have replaced a lot of television consumption.
Totally.
And what people don't always realize about YouTube is that a massive amount of YouTube viewership happens on TVs. So this is people in their house, instead of turning on CNBC, they turn on TBPN.
I get crazy screenshots all the time. People text me photos and they're watching it on the TV.
Yep.
And it blows my mind. Because,
Yep.
and it was the same thing with my YouTube videos. I was like, you watch this on TV, that's like insane. But I guess when you put a lot of production value into it, it looks like TV.
Yeah.
And that
was our thesis. That was our thesis around if you actually want to compete with television around news, you have to record every single day. Otherwise, nobody
in high quality like this. And it's also just so much more snackable because we can take that clip, we can take some of those great clips that we just had, put those out on X, put them out on shorts, make vertical shorts out of it. And if you just have pure audio, you just can't distribute it that much. It's really, really hard. Sometimes there's transcripts that can go viral every once in a while, but it's rare.
Yep.
Anyway, Delian should be joining in 1 minute. Let's see if we have another post we can go through. Bullish on one-person teams. Card is at 2 million ARR. Chatbase is at 3 million ARR. Levels IO products are at 3 million ARR. Testimonial IO is at 1.5 million ARR. tdin.me or _me products at 1.2 million ARR. Ben Lang says he's bullish on one-person teams. Pretty crazy. What was the decision between PMF or Die to go two-person team?
The whole thing was that PMF or Die was like, how do you apply these sort of extreme constraints, 90 days, 25K to at $1 million of ARR, sort of the simple concept. But then outside of that, you have to stay in the house, but there's no real rules. You can kind of do anything you want.
Sure.
That's business, right? That business has sort of, there's laws that govern business, but there's no actual like rules in the same way that when two teams go on an NBA court, they have to follow specific guidelines. And so we wanted it to as close as possible match sort of like free market competition. The one thing with this Ben Lang post that's interesting is this to me proves that if you are really ambitious and you want to have extreme scale and impact, you actually have to build a team, right? Because this list would be more impressive if every single company on here had 20 to 100 million of ARR.
I think we're ready. Delian, are you there? Can you hear us? Let's bring you in. I think he's close. We're figuring it out. Let's see. 3, 2, 1. Hopefully he's live. Going in. He says he's waiting to be let in. He's in the room. Let's get him on the show. 2 call-ins one day. It's a big, big push, but we're ramping up. We're going to be doing 10 call-ins a day pretty soon. As long as people want to come and chat. We got to make this easy for folks. Hey, Delian, how you doing? Can you hear us?
There he
Yo,
is.
what's up? Sorry,
No, all good.
in a while.
Busy
Give me
day?
the update. What's the latest with Varda?
Yeah, brought in a capsule from sort of Mach 25 down onto the sort of Australian desert floor.
Nice.
Teams out there, going to retrieve the capsule over the course of the next couple hours. It's currently nighttime in Australia.
Cool.
Yeah, all things sort of looking pretty good. So we're 2 for 2, baby.
Nice. What was in the capsule?
This time around, it was an Air Force Research Laboratory spectrometer. They're basically staring out of the window of the reentry capsule to basically characterize the plume of the reentry vehicle and compare that to some of the materials that are on board. I'll leave it to the viewer to speculate as to why the Air Force might want to do that in relation to potentially trying to figure out what other vehicles are made of, perhaps ones that they themselves did not make. And we'll leave that exercise up for the viewer. But we're super excited to sort of help out with the maturation of that type of technology and what it means for our country's national security.
That's awesome. We got to call Jesse Michaels to get him to speculate.
Exactly.
What does the cadence look like going forward? Are you just doing do you know when the next one is already? Are there going to be just dozens of these? Give me the kind of next couple.
Next week.
Next week.
Hopping right back up and getting back to it. So quick turnaround time, turning this from a one-off R&D mission to this year we're planning to have 4 vehicles total. 3 of those will be more DoD focused missions. It's not to say that there won't be some farm on board, but it just won't be like the primary sort of focus of the mission. And then one of our missions this year will be a primarily pharmaceutical sort of focus mission. And we kind of expect that sort of blend on a go forward basis. And looking to basically just continue to increase the cadence sort of year over year. Definitely some sort of vehicle improvements that'll happen from one mission to the next. And generally for the time being, continue to sort of land in Australia, just given the regulatory regime and the emptiness out there, making it a bit easier. But at some point, looking forward to returning back to the United States once that becomes available.
Are you expecting that to get easier in the U.S. with the new administration?
For sure. I think it's something that the sort of new administration is sort of clearly aligned with, but it is just one of these sort of operational things that just takes some time to flow through, designating which of the military ranges is best as a landing range in the United States. We're basically just taking the sort of same sort of legal and regulatory framework that exists at sort of Cape Canaveral and Vandenberg, both of which were government-run ranges that now obviously prioritize commercial activity. There isn't the equivalent of that for reentry. Right now, there is no sort of dedicated government-run sort of reentry range. We're exploring a variety of other sort of options, potentially sort of private sort of ranges as well, as we continue to narrow in the sort of size of our landing radius, and so over time may not need to be reliant on a sort of government plot of land, but instead perhaps there's some private plots of land that are large enough. And so
what is the
we're
ideal?
super excited to have a say again.
Sorry to interrupt. What is the ideal range size in your view this year? How much smaller can it be over the long term? And is that even the right question to ask?
I think that information is ITAR restricted. So, what I can say is, on the order of, around 100-kilometer circle, or so. And so it's pretty, sort of pretty big, to have that be fully empty and owned by one person. But that circle will, sort of get smaller and, maybe sometimes we won't open the parachute and it'll be a very small circle.
That's great. Are you tuning into the next Starship launch? What are you hoping for there? What are you watching for that?
Yeah, I mean, look, we built this business predicated on Falcon 9, sort of reusability and the cadence of that. And it's been really exciting to see that mature over the course of the company's life, right? Sort of Falcon 9s at this point are launching every 24 hours. We're super enthused by, sort of SpaceX's progress and the, sort of potential of Starship. There's definitely, obviously, sort of lots of kinks that need to be, sort of worked out, but, not so dissimilar to, sort of Falcon 9. It definitely took it a decade from, sort of the first landing to, sort of becoming a, sort of true workhorse that was, sort of launching every day. both SpaceX is much larger, but also so is Starship in terms of complexity. And so, I hope that they, sort of get, sort of through that, over, sort of faster than a decade. But also they've got a lot of programs and payloads that are more important than us. They've got everything from the, sort of lunar activities that they've got, Martian activities. They've got Starlink satellites to launch. And so, at least, sort of my internal underwriting is like, I'm not quite sure that, sort of Starship is going to be launching people like Varda, before the end of the decade. So it's like super exciting, but like I also have to run a business, month by month, year by year. And so I can't focus on things that, sort of relevant in 2030. I have to focus on the things that are taking me up to, sort of space today. And Falcon 9 is a pretty damn good ride to orbit every 24 hours and, reusable, at least for the first stage, pretty, sort of pretty good offering. And, perhaps there are other people that are starting to, sort of, try to, elbow into that, sort of world. God bless Papa Bezos, and hope it works for him. And we're happy to get up to space. Which way or how. Rocket, rail gun, space plane. Just whatever works. I don't care. I just need my sweet microgravity.
Amazing. How big is the company? What roles are you hiring for? What's kind of like the biggest challenge over the next couple years?
Yeah, we're about 115 people, basically entirely in the Los Angeles, area. Over the course of the next year, I think there's, sort of two, sort of, sort of core areas. One, sort of pharmaceutical, sort of teams definitely, growing. We're, sort of starting to, work on a broader, sort of set of assets. We're, about to open up a new, sort of lab space for the team. And so anybody with a, sort of, formulation, crystal engineering, sort of background, process engineering, the types of things that we do up there, we'd be super thrilled to have. And then, generally on the aerospace side of things, going from a, sort of, one R&D mission to now 4 flights next year, even more, hopefully, sort of year after, just means obviously we need, a lot more talent on that side of the house. And that's everything from, firmware, software engineers, flight software to, sort of avionics, structures, thermal, mechanisms. And then we're starting to think about, sort of more manufacturing engineering since, we're starting to, I'd say we're early in that transition from, sort of vehicles manually assembled by high-end engineers to starting to introduce, sort of more technicians into the mix and, sort of more automation. It's not to say that we're, going to be looking like a Tesla style, sort of assembly line anytime soon, but, one day need to, sort of start to, sort of look more like that over time. And so, some amount of manufacturing engineering as well.
Are there any proposals that you're excited about in the new administration around like the space economy? Any like, if there's one law you could change, what would it be? That type of question.
Well, sort of the new administration hasn't talked a lot about the space economy, but it has talked a lot about, sort of space being a potential zone for deterrence against our adversaries. And so that's definitely something that we think, has a lot of potential. We think we can field something pretty near term there. And as you start to think about, sort of space activities that, perhaps want to, sort of go down to the ground, all I'll say is, sort of the, company that just bombarded Australia from space is probably, sort of well suited to help out with that. This time around we pulled the parachute, but, sort of next time if you want us to not do that, we're happy to leave the parachute.
Our very own space arms dealer. Taking a quick.
Hey, I've always been consistent. I'm a space drugs and arms dealer. Nothing, no surprises here.
Yeah, no, it's amazing. You were putting the secret master plan in your bio years ago, so it's amazing to see it play out. You recently ratioed Chamath after he tried to, reply to one of your posts. You said you had made, more investments, I think, in the last few months than you had in potentially the last couple of years. Where have you been investing? You don't have to speak to specific companies because I'm sure a lot of those rounds haven't been announced, but where are you investing? Obviously just chasing generational founders, but what's most exciting to you in the early stage market today?
It's all AI slop. I just want everybody to have their own anime girlfriend, and she just, sort of jerks you off every night, and that's how we, sort of maintain world peace. And as much as possible, that's
the
what
opiate of the masses.
Bread and circuses.
Yeah,
right?
That's what, really changes the world, and is really for the best. No, I mean, it's kind of what you'd probably, sort of expect. I just I love stuff that is making stuff in the real world. And it turns out with this admin, they want us to do more of that in the United States. And I want to fund people that want to do that. And I want to do it with people that are serious and it's their life's work. And they're not just doing it because dynamism is the new meme and they want to be a part of the meme. I want to, sort of fund the people where, their family's been a manufacturing family for 3 generations and they think they can do it better because they're going to integrate some robots, some AI, et cetera. But, I still have that, sort of, lifelong tie to that sort of particular industry. And so I've been really sort of excited over the past couple of months, where it just feels like a lot more people are thinking about that being the type of company that they can build. And I think you're really just starting to see sort of the clear the difficulty in sort of being somebody that was screaming sort of atoms not bits in sort of 2019 was my sort of former sort of colleague Everett sort of RIP would always sort of critique me for sort of saying that Delian just likes investing in low margin sort of capex intensive businesses. And sort of 5 years later, my sort of spin back to Everett would be which one do we think is going to be more valuable, the like sort of TikTok captioning app, or sort of the company that's sort of cutting sort of metal for all the sort of nation's sort of future warfighting capabilities. I like the cutting metal one, but Everett, you're welcome to sort of go invest in your sort of captions sort of products. I'm sure that'll be great, brother.
Shots fired.
Shots fired.
Love it. A little friendly competition. You guys
We
can
can send that
compare
clip to
notes
him,
in
by
a
the way.
decade.
Yeah, that's great. Well, it's 1:30. We'll let you get out of here. This is fantastic. Thanks so much for stopping by.
Yeah, sweet. Later, boys. Bye.
Thanks
Bye.
for coming on. Talk soon.
This is great. Never a dull moment with Delian.
We got two of the top poster in ecom and the top poster in hard tech
Oh,
in the
yeah,
same day.
in the same day.
It's
They put on a show.
fantastic.
It's
Putting on a
great.
show. Yeah, for those listening, our strategy here is to develop regulars on the show, people that call in. We want to have, if there's big news in e-commerce
Yep.
and big M&A, we'll have Sean Frank call in.
Yep.
Get really sort of like boots on the ground takes on that. If there's stuff happening in space, we'll get Delian to call in. And both of them really delivered today.
Totally.
And I wish those, it'd be fun. It's actually, we want to leave the conversation wishing that it could just keep going.
Oh, yeah, for
and
sure.
we'll bring them back on the next week.
Yeah,
So,
yeah, definitely.
Um,
Oh, that's
very
fantastic. Well, let's go back to the timeline. We got plenty more to talk about today. AJ Mehta says, couldn't be more excited to share what I've been building over the past year. A cute AI alien friend that is fun, helpful, friendly, and won't try to fall in love with you. Tolens remember things about you. They're really good at voice chatting, and they can peer into your world through photos. It has been so inspiring to see how people use their Tolan. Help with school, relationship advice, fit checks, and just hanging out. It's been such a treat building this with his co-founders, an incredibly talented team of engineers and artists. Can promise that Tolan is unlike any alien you've met so far. We're live in the App Store. Go check it out.
Okay, so I know AJ. He's LA-based entrepreneur.
Yep.
He actually was partnered with John Fio on
Yep.
Birthday Candles.
Yep.
I don't know if you've ever met him. So
I have. He worked at a crowdfunding platform that I used back in like 2013.
Crazy.
Tilt
I had seen Tolan.
Yeah.
I had been, somebody had sent me them probably, I don't know, maybe 6 months ago at this point. I didn't know, even though AJ is a buddy, I didn't know that he was involved with it because
Very cool.
they didn't really come out very publicly. So this is really cool. This is a thesis. People have been thinking about this sort of like AI Tamagotchi or this
Yep,
AI
totally.
sort of Pokemon. Been a lot of conversation about it, but very cool to see they have over 500,000 downloads, developing some meaningful ARR and a #1 spot in the App Store. So I think there's going to be a lot of stuff here. There's another company, I'm forgetting the name of it right now, but making like embodied AI, so kids' toys that have LLMs built into them,
Yep.
which is cool. So I'm just expecting to see a lot more of these,
Well, that was
and
always my
they
take
seem
with
to be.
that was always my take with the Rabbit R1.
Yeah.
Is this hardware device, really cute, teenage engineering developed it, but MKBHD got a hold of it and was like, this isn't replacing my iPhone. And it's like, that's
Yeah.
totally fair. But I always thought, I didn't buy one, but I thought that it would be a great device for kids because it's something that they can just ask questions to, interact, take a photo. What flower is this? What animal is this? Like,
Yep.
and it just feels like the bar for hallucination, as long as you gate it so it's not saying crazy stuff. If it tells you that like this squirrel is a mouse or something, like that's not that big of a deal. It's not that high
Yeah.
stakes. And some of those
It's not like calling an
hallucinations-
Uber and it sends it to the wrong place.
Exactly. So the frustration of a kid dealing with like, some sort of rough edge around an AI that's still friendly and fun. It's like,
Yep.
it's like the Genmoji
No, and
thing,
even-
but applied to an audience that is totally receptive of
Yeah,
that.
and what do 5-year-olds do? They ask questions.
Exactly.
Right? So it's just this constant stream of questions,
Yep.
and it's great when a parent's around. But
Yep.
it's funny when, my son, my oldest, is not really at this point yet. But I imagine he's about a year or two away from starting to ask questions that I don't know the answer to.
Yeah.
And so having this thing that's, not necessarily a cell phone that they can have independently or when we're together to sort of generate those answers.
Yeah, the 5
cool.
whys stage, you know that whole question of like in management, you need to be able to ask 5 whys deep to understand the root cause analysis. Toddlers, amazing at that. They just keep asking, why does the fire truck come? Where does the fire truck come from? Who makes them? Okay, who makes that part? I'm like, I actually don't know the supply chain that deeply, man. Good luck.
I'll have to have somebody on the show.
Deep research, I'm sure we can pull it up. But speaking of AI products that have gone off the rails and not been as focused as what is happening over at Tolan. Notebook LM from Signal. Notebook LM has had insane potential, one of the best products Google's ever put out in years. We talked about this on the show very early on. You could have it generate a podcast of 2 people talking about a topic to educate yourself about it. But in classic Google fashion,
to prep for a show once because I was driving in one morning. We were doing a deep dive on something. I had zero context on the entire story. I generated, a podcast about it, and it helped me really quickly get up to speed. So it's cool. But I actually have some backstory here. I was at a dinner in Venice that two of my buddies, Ben and Adam, who have a venture fund, hosted, and one of the guys the product designers from the Notebook LM team was there. And he was excited because when you're at Google and you're working on this super hot startup within Google or this product, you become an instant sort of micro celebrity in the organization, and there's all this momentum and more resources coming your way. It's a similar sort of thing that a founder goes through at an external company when they have a lot of hype. But I believe he and the team, or some members of the team, just left to start basically that product. So I think that they lost potentially the sort of founder spirit that they had that were able to create that product.
So they said Signal says, but in classic Google fashion, it seems like it lost all momentum and got left to die. No mobile apps, no meaningful iterations, just VPs choking it out. The vultures came and picked it apart. Google's playbook for smothering internal innovation is unmatched. And then Andre Karpathy chimes in. They iterated on it a bit, custom instructions and the ability to join the podcast. But overall, I agree. I think I actually used it again this morning after a while and it felt a bit regressed even. The woman's voice especially sounds slightly more dead / less interested. And Signal says, it got hijacked by terrorists, parentheses, AKA Google leadership.
Not holding back.
And
Signal.
I mean, it makes sense. Even when it was announced and it was gaining traction, it was still hard to get into that pipeline. It was very unclear. It wasn't its own app. It wasn't the Gmail launch where Gmail became this phenomenon, and it was a separate website. It was first it was this Easter egg, then you had to refer a friend, get storage and stuff, and they ran a great playbook, not just promoting that as a separate product for Gmail, but also running all the growth strategy to make it more viral and make it work. And it just seems like that energy has kind of left, especially when there's such an incentive to spin out of Google, raise a bunch of money, and instantly be at 100 million ARR and $1 billion valuation, which is something we've seen again and again and again.
No, the big thing here is that Google's leadership deserves a lot of. They're certainly under pressure, but they deserve the scrutiny and they deserve to be called out by letting these sort of high potential products, like Gemini in general, right? A lot of people are saying Gemini's great when I can find where to use it or how to use it, or it's not, over promising and under delivering. But there's this general, when you compare Sundar to Satya, they're just not even in the same league, right? And it sounds harsh, but I think that we should hold our $1 trillion hyperscalers leadership to a high standard. And I think it's very possible that Google needs new leadership at the top. People called for it when their AI image generation models were just generating made up history basically, and now it just seems Google has the most potential in. They should be Google should be trading as a meme stock if it had good leadership, and they're not getting any credit for the position and the opportunity that they have in the market because they seem to just continue to squander these opportunities. That whole Gemini generative AI image generation debacle.
I think they fixed it. It's pretty easy to go in there. It seems like it was fine-tuned after they built the model to inject a bunch of extra keywords to try and make it more diverse, and it had all these weird anomalies. Easy to fix. To fix. There was clearly backlash. I guarantee they fixed that product, but they didn't integrate it anywhere. I just went to Google and I said, draw me a picture of a frog. And it just gives me like Google Images results and then Adobe stock footage and then Pinterest and then Reddit. And it just gives me like the normal Google results. And it's like the Google search bar is my entry into the Google world. And it should know that that's an AI query. I asked it to do something and it didn't do it. And so like whoever's on that team is probably like, oh, well, like, they're not letting me stick my product in the main thing. And so now I'm off on this siloed thing. And how do I even get to that? I think they're just announcing that they're going to do a separate Gemini app. Maybe that's a good decision. I don't even know at this point. It's all very confusing from a strategy perspective. Yep. But they got to retain the talent. They got to stop these people from jumping ship and raising billions.
Yeah. I mean, I feel like if we could probably talk to the guy who built the product. I'm blanking on his name now.
Yeah, we'll have to get him on when he launches his company.
No, he already raised money, I believe.
Yeah, he should announce it here.
And anyway, so we'll see. But I hate to see a good American technology company, squander incredible opportunity.
And there was that whole narrative of like during the AI boom, Sergey and Larry got super interested and they were coming back in and grinding and like picking up the momentum and the pace. And there was a moment where we were like, oh wow, like Google's going to go back into founder mode. They're going to own 100% of Waymo. They're going to really double down on this stuff. The mission of Google is to organize the world's information. Like, what could be a better distillation of that than building an LLM? Like, an LLM is just distilling the world's and organizing the world's information into weights.
Lost in the sauce.
And they've done phenomenal products. The actual LLMs perform very well on the benchmarks, but they're just not productizing it effectively.
Well, and they allowed a bunch of external investment into Waymo. Right?
That was weird.
Which is weird, right? Yeah. Why do you have... you don't even have you're running this massive balance sheet, and you have a breakaway, potentially truly world-changing product that's growing exponentially. And you need, these big external.
I mean, that one I can kind of steel man because it's like Google's mission is to organize the world's information, and Waymo doesn't exactly do that. It doesn't exactly fit in the mission. And so I understand why that might be, and it's a very different capital intensive business. There's all these different layers of the stack, the routing, the partnership with Uber, who cleans them. It's just it's like getting into delivery. It's like, it's more akin, I would just expect like Amazon to really like want to be in that more than Google. But for the LLM stuff, like they got to figure out this product side. Anyway, let's move on to designer Ben Hylack. He's been on the show before, known for his Jaguar redesign. He says, I used to be really afraid of competitors, and then I realized they can't hire me.
Iconic line. Ben, I actually threw this in because he rolled out a new website that he made himself. And I think it's one of the best new sites that I've seen. So if you're listening, go to dawn.so and check it out.
DON?
DAWN.so. And he cooked it up himself. I'm navigating around it right now. It's fantastic. And check it out. But yeah, I think his broader point with this post, which is somewhat of a S-word post, really trying to. John was, upset that I said the S word yesterday, so I'm not going to say it again today, even in the context of an S post. But the broader thing here is having that confidence in himself.
It's called a meme post, a joke post.
A meme post.
He's joking around,
post, right?
It's like meme. We say meme coins, not S coins.
Yep.
Same thing.
But yeah, I think founders that are overly focused on their competitors, it's just the biggest trap. You need to focus on what you're truly great at and try to spend as much time as possible doing what you're great at and augmenting your skill set. And you should never be afraid of competitors. It actually, it took me a while to realize that these markets that most people are playing in are so big. Just focus on your customers and focus on yourself, king.
Yeah. Become unhireable, become ungovernable.
Yep.
It's great. Well, let's move on to Nick Carter, who did a fantastic job censoring some foul language on the timeline. He says, holy F ***, S ***, 35 billion, I'm weak, hold me.
Okay,
and
so the news here is that CoreWeave is planning an IPO within a week that would allow them to raise $4 billion. and would get priced at around $35 billion. And pull out the size gong because Nick Carter is the Jason Calacanis of CoreWeave. He said it himself. There we go. Chris Pitt of the gong. Fantastic investment. Nick, I saw in the comments, is friend of the show, but he was one in the first round of CoreWeave. And you can make a guess if he entered, assume that he entered at 50 million posts. Yeah. The multiple on this one is absolutely egregious, and will probably dwarf his earnings from his day-to-day job.
Who knows?
Who knows, right?
He's made a lot of money in a lot of places. Yeah, he's very successful.
But still, he says this is his best investment.
Yeah,
by far, and it's not even close.
Fantastic.
And we're just happy for him. So I wanted to highlight this.
I love it. Yeah. CoreWeave, a lot of people are going to be looking towards this to price other data center projects. They're an AI cloud computing provider. They build data centers and then lease to people like Satya Nadella at Microsoft.
Satya loves to lease.
And so there's a number of players here, and there's a big question on how the public markets will receive companies like CoreWeave as they go out to the public market. And so everyone is waiting with bated breath to see where this trades. We talked about Stripe earlier.
The timing is certainly shaky, right? You can imagine Core is running the analysis on Nvidia's down 6% today. Yep. Even as they beat earnings, the market is starting to, the animal spirits are.
Yeah, there's a few things going on. I mean, DeepSeek people they kind of coped through it with the Jevons paradox thing, and and then the XAI news, and they kind of balanced out. But it was definitely like it made people just do a slight double take on, like, should we really spend the trillion on a big data center or something like that? And then also you have a lot of questions about the public markets and how the U.S. economy will do under the Trump administration as these campaign promises actually get rolled out. And if there are really significant tariffs or something like that, like there could be dislodging behavior in the market, and that could have an effect all over the place. And so we'll see, but good luck to them. And, if you're losing sleep
over the markets,
stressing over the markets, we recommend that you get an 8sleep. Go to 8sleep.com. Nights that fuel
8sleep.com/TBPN.
Yeah.
You have a fantastic quote there.
Turn any bed into the ultimate sleeping experience. How'd you do last night, Jordy? Let's check it out. 8 sleep.
I am mogging you in the sleep department. I already know I have a better score than you. Just
85.
97.
Oh, let's go. Okay, I got to get on my game. That was rough.
I think
6 hours and 50 minutes last night. What'd you do?
7 hours and 59 minutes.
Whoa, there we go.
I'm just really dialed into my
Jury's
routine.
Way up there.
I was texting somebody at 8:20 last night,
and
they were like, they listened to the show. They were like, "Isn't this your bedtime?"
Yeah.
I was like, "Yeah, it is. I'm about to put away my phone and crash."
Nobody outsleeps me.
Nobody outsleeps me. It is. It's one of those things. I do think that sleep, from a fitness standpoint, once you identify as somebody that goes to the gym, I find it's very easy to just go to the gym every single day.
Totally.
So when I started working out after I partied too much my freshman year of college, I just started going to the gym, and I just identified as somebody that went every single day. So I would just go every day. Super easy. Sleep is very different. You're doing stuff in the evenings. You have varying levels of work. Sometimes you need to be out of the house earlier than other times, so it's hard to get consistent. But just been focusing on getting extremely consistent, and it's paying off because we need to put some real money on the line.
For sure. And we also need to test the testosterone levels, because I was scrolling through YouTube, see a great Chris Williamson quote or clip. He's interviewing Dr. Peter Attia.
Yep.
2 steps to one secret hack to improve your testosterone. Open it up. I'm expecting some crazy supplement or something. He's just get some sleep. That's it. I'm like, okay.
Wish it was more exciting.
But it's easy.
It's easy.
With an 8sleep.
It's free to sleep.
Let's go to Emily Sundberg, one of the greatest journalists in the game right now. If you don't subscribe to her Substack, we highly recommend that you do. She says she wrote about Unwell and breaks down Alex Cooper's podcast career. So in 2018, Alex Cooper, now famous for Call Her Daddy, started alongside Sophia Franklin, debuted the Call Her Daddy podcast. So she's been in the game for 8 years now. The show quickly gained traction with downloads soaring from 12,000 to 2 million within 2 months. That's a historic run. Fantastic. Tensions arose between Cooper and Franklin over contract negotiations and creative direction, leading to Franklin's departure. Cooper continued as the sole host, steering the podcast through a transformative period. Cooper signed an exclusive 3-year deal with Spotify worth over $60 million.
So
that was 2021.
here's a little bit of lore.
Yeah.
Back when this article, when the feud was happening between the Call Daddy hosts, this is in 2020.
Yep.
I spoke with Taylor Lorenz.
Yep.
Taylor was writing for the New York Times at that point. And anyways, I helped Taylor get some context on the story. This was before this was at a time when she really had the tech industry's attention. This was the booming creator economy. I said, this was a quote that ended up in the article, we're entering a period where creators are business owners and media brands of their own. They can't just be seen as employees. Mm-hmm. The tools are available to them to become founders and CEOs of their brand and develop businesses with multiple powerful revenue streams like merch, ad sales, and subscription revenue.
This is your quote.
This was my quote
in the New York Times.
In the New York Times. And what I was speaking to was that it was going to be Miss Cooper was such a star that it was going to be really, really difficult to keep her there because she had so much attention herself. She could spin up a new RSS feed and have, hundreds of thousands or potentially millions of subscribers in a week, right? Yep. So the value, historically you'd have these sort of creator types that were dependent on the distribution of a TV channel, right? Yep. So they could only be this big, figure personality if they had their, relationship with ESPN or CNN or CNBC. Now, and this really proved out. She went on her own entrepreneurial journey, realizing that she had a lot more leverage in that situation, even though she was making, millions of dollars a year at Barstool.
Yeah. And so she signed with Spotify for $60 million, which was one of the platform's most significant agreements for a female-led podcast in 2021. Then, along with her husband, she launched the Unwell Network, a media company aimed at developing content with emerging creators. The network's initial signings included influencers Alex Earl and Madeline Argy. In 2024, she secured a $125 million 3-year deal with SiriusXM, setting to commence.
These are Supermax deals.
These are massive deals.
It's wild. NBA money.
Yeah, I mean, for the super top Power Law podcast, they get up there. Similar to Pat McAfee with ESPN. I think the deal is in the 100 million plus range. Joe Rogan, same thing. Transitioning Call Daddy to a new platform. And then in 2025, Cooper introduced Unwell Hydration, an electrolyte-infused beverage line developed in partnership with Nestle. Interesting that they're going with the big corporate partner out of the gate, targeting women's wellness. She also added several new shows to the Unwell roster, including former Barstool host Grace O'Malley. And so she's really grown her empire, and we'd love to see.
Yeah, and the what Emily gets into in her piece, which you can go subscribe to her Substack and check it out. But she just lost Alex Earl, which is this massive figure right now and one of the biggest anchors. And so the same issue that Dave Portnoy was experiencing with having the star and then losing said star is now the same issue that Alex Cooper, which is why people have had this, idea for the Barstool for X, the Barstool of business, the Barstool of XYZ, right? And the challenge
completely the wrong, because Barstool is not the Barstool of something. It's Dave Portnoy show.
Yeah, and when we set out to start TBPN, there was a bunch of different networks that we could have worked with, but we were, our point of view was we can set out on our entire business. We can have one producer. We're going to have to incur some costs to get the show running, but they're costs that are, most adults can cover, right? It doesn't cost millions of dollars to start a podcast when it would have cost millions of dollars to start a TV network.
And that talent retention problem is so real. You saw it with Vox Media. I think eventually Kara Swisher spun out after she sold Recode, started her own thing again. Johnny Harris spun out of there and started a YouTube channel. He learned all the skills. And so, there were startup costs. He had to hire people to do the motion graphics and he had to work really hard to get it off the ground. But very quickly, people recognized him. Oh, that's the guy from Vox who does the Border Show. I see it in my YouTube feed. And Cleo Abram left Vox as well to do the same thing. She was at 1 million subscribers in a couple months. And it's because Vice, the Try Guys, did the same thing. BuzzFeed I guess they were at BuzzFeed, but Vice and BuzzFeed guys, teams have left over time. And the easiest way to go viral on YouTube for a long time was just put up a video, say, why I quit BuzzFeed. why I quit Vice, why I quit Vox, and boom, it goes viral. And overnight you have, 100,000 followers or 1 million followers. This just happened with Donut Media. I don't know if you follow them at all, their car channel. A lot of people have been leaving that. They got bought by, I think, some private equity firm or some investment firm. And so the talent wasn't fully economically aligned. And over time, more and more of the talent just realized, wait, I should just be running my own show. And so there's always this, talent retention is very, very tricky. It's very, very tricky to align the economic incentives when you have these small teams. But the future seems to be like the networks are not, to me, the Donut Media or the Barstool or the Vox or the Vice. The networks are X, Facebook, Instagram, YouTube, and you can be on all of them, but they have the power and they have something real that they are going to get a cut of our business and Alex Cooper's business and everyone's business. And then the shows are the individual people. And so aggregating people together, it just doesn't work unless there's something really crazy going on. It's really perfect. And so I think that the future is definitely stuff like what we're doing right now.
And if you're more operating a scaled network or media business, you have the option to grow homegrown talent, which takes a long time and it's really hard. And then you might actually get a hit and then they'll leave. Or you have to pay a ton of money, which is what SiriusXM is doing, spending $125 million for a 3-year deal.
And that's just distribution rights.
That's just
not
distribution
exclusive,
rights.
or maybe it's some piece of it's
certainly
exclusive.
Not fully exclusive.
No. But it makes sense because they'll be able to sell $200 million of ads against all of that on the radio, hopefully.
Yeah, or get subscribers that offset that cost. User acquisition basically. But yeah, overall, going to be only SiriusXM is cable at this point, right? It will just sort of fade away over time. It will probably have some enduring value, but won't be the giant that it once was.
Well, if you're looking to advertise a podcast, get on AdQuick. Out-of-home advertising made easy and measurable. Say goodbye to the headaches of out-of-home advertising. Only AdQuick combines technology, out-of-home expertise, and data to enable efficient, seamless ad buying across the globe. Get an AdQuick billboard, folks.
We got our own podcast billboards coming up.
We're working on it.
I can't wait.
And I imagine a lot of people listening to this, we need to do the SiriusXM deal too. So then you can be listening in your car to TBPN, and then you drive by our billboard, and it's just 24/7. We're in your
SiriusXM is so funny. I you know me, I cycle through cars a lot. So anytime you get a new car, they're just sort of like aggressively marketing to you, and they'll send you mail that says, "Open this right now." And you open it up, and it's like, "We'd like to offer you a free month of SiriusXM," and you're saying, "Okay." You stop opening them, but anyways.
Well, we got some news
Best
from
of luck to them.
Cognition Labs. Devin just got faster. They've heard your feedback that Devin is too slow. Devin is an end-to-end agent that makes hundreds of decisions for each task. So that test time inference stuff that we've talked about, essentially the reasoning models, that's what Devin's been doing for a long time. So there was and is still a long way to go, but they've made Devin 2.1x faster over the past 5 months, and the trend continues. And so congratulations to the team at Cognition Labs. If you're running a startup with a big GitHub repo, get Devin in there. Get it in your Slack.
Get him in there.
Get him in there.
Could be your next
Put him to work.
top engineer.
Yeah. I mean, Devin is, it's weird saying he by anthropomorphizing it, but Devin is like the top engineer at Gumroad, right?
Yeah, Anti-Work.
That's so crazy.
Company.
Yeah. I mean, it makes sense. Like there's so much like junk little tickets here and there, code that needs to be fixed, and like no one wants to hop on those.
Yeah.
Put Devin to work over the weekend.
Put him to work.
Let's go to Paul Graham.
Put him in Workspace 17, actually.
Yeah. That
historically underperforming workspace.
Historically underperforming. Famously underperforming.
Let's go to Paul Graham.
Paul Graham says, there are a lot of people attributing crazy beliefs to Elon lately, but to me, the clearest sign that he is not entirely rational is the continued deprioritization of tweets with links in them. Everyone can see that this makes Twitter worse.
Yeah, hits him with the T word.
Tweets, yeah. Oh, that's disrespectful to the X culture.
I mean, Paul follows it up by saying the suggestion that one should put links in replies is such an obviously broken workaround. Who, starting from scratch, would design Twitter to work like that? I totally agree with Paul here. It's totally possible to simultaneously see exactly why Elon is doing this.
Yep.
it may make X, lack of links makes X worse for users.
Yep.
But it makes X better for Elon, right?
Yep.
He wants to keep people
Yeah.
on the platform, and I bet you that it is working exactly as intended.
Yep.
Twitter used to be a place you'd go on and you'd discover articles, blogs, videos, music.
Yep.
It was just sending you across. It was like the most amazing discovery engine.
Yep.
For the internet. It was effectively like a stumble upon like product where you just go on, you didn't know what you were going to find, but you were going to find interesting, topics. It was a great place for writers to distribute their work.
Yep.
It's still a distribution platform, right? With PMF or Die, we saw this. We launched a post, got 1 million plus views on the post.
Didn't include a link.
Yeah,
Made the post native for X.
Yeah.
What works on X? Vibe Reels. What works on X? Threads. So
X
whatever
is
you
more of
want to
a-
do elsewhere that would be on a link, you can upload a 2-hour movie if you want.
Yeah.
You can't link to Netflix.
I would argue that X is now a platform for attention and not distribution. So you can get people's attention on X, but it's not this sort of linear distribution of I wrote a blog post, I'm going to post it on here. A bunch of people are going to click over.
Distribution's never guaranteed.
I still get a lot of links out to my personal website, but there's a very clear line. There's every single month, millions of people see my posts.
Yep.
Some percentage of those click to my profile, and then a smaller percentage click to my personal website, and I see all the traffic, right? So, anyways,
but it's a skill issue. Some people post links and still go viral.
Yeah, and the tough thing
You're
with Paul, he's an incredible writer. He condenses his thoughts down. He writes in a very straightforward way. He should be able to just post his posts directly.
He can, but I think he likes the aesthetics of his website.
Totally.
I think that's the main thing is he doesn't want to conform to the X thing, but he should just copy the text and put it in a long post.
Yeah.
And it'd be fine.
But and there's a huge edge that people like Paul and Ben Thompson, they built up these newsletter, these newsletter
Does
lists.
PG even mail? I don't even think he has a
I don't
newsletter.
know
I
if
think
he
people
does.
just literally just go and check. Oh, there's a new PG post.
Yeah.
But I mean, you either got to build your list, offline and have that as a channel and grow it and have different growth strategies for that, or repurpose all your content to be X native, whether that's through threads or long posts. Lulu's been able to do it. I see tons of people that can do it with threads, tons of people that can do it with videos. All sorts of people have found ways to break through with the algorithm, but it is frustrating because it's high standard deviation. And when you have a post flop, it's hurtful to your ego.
We've talked about it before. I've had a lot of people reach out to me or you and say, "Oh, I think I'm shadow banned." All this stuff. I go, brother, you haven't had a banger in weeks. It's not the platform. It's you.
It's you.
You got to take responsibility for the flops.
Well, speaking of an absolute master of algorithms, let's go to Mr. Beast. He's raising money at a $5 billion valuation. The YouTube star aims to raise a couple $100 million, and he, quote, lost tens of millions of dollars on the Amazon reality show. I don't even know how that's possible because isn't Amazon paying for it? But I guess he might have.
I think he has a history of betting on himself to such an extreme degree that he will go out of pocket.
Sure. Yeah.
And
consistently.
Ultimately the Amazon show is as much distribution and sort of marketing for the rest of his business empire as it is. I'm guessing he looked at it and said, I don't need this to be a profit center. I'm fine if it's a cost center. I have lunch, what is it?
Because it's going
Feastables.
So in the Mr. Beast deal, if you invest at a $5 billion valuation, you get shares in a company that's making $400 million in sales, and that's across Lunchly, the Lunchable product, Feastables, the candy company, Mr. Beast Burger, the Ghost Kitchens driven burger delivery company, and then Mr. Beast LLC, which is the production company. And so you get assets in all of those. But yeah, he's always been reinvest everything. He wants to be aggressive. He's running his business more like a Silicon Valley startup, trying to burn money, really go for growth, and then capture the value later. And so far, it's been working.
Yep.
Big numbers.
We got to hear the update on Mr. Beast Burger. I think from what I know, the sales of Lunchly and Feastables have been pretty phenomenal. Mr. Beast Burger had a bunch of issues early on. I've never seen it anywhere out in the world. It's a delivery-only product, but I haven't even seen it online once. The last time I saw it was around the controversy around the quality issues that they were having.
I mean, the quality control on a product like Feastables is way, way easier because it's just if it leaves the factory in a good condition, it's probably going to get to the customer in a good condition, especially when your chain is Walmart delivery, as opposed to it's being made in all sorts of different kitchens and then delivered by all sorts of different people. There's a million places where that can go wrong. And there's way more people taking a slice of the profit in these ghost kitchen companies than in consumer packaged goods, which are already not super, super high margin. But the Mr. Beast burger, I think the financials it was always a harder lift than something like Lunchly or Feastables, which can just be, hey, we make 1 million chocolate bars, we drop it off at Walmart, and it flies off the shelf because I'm a celebrity. So
the whole concept of airdropping food to people it sounds incredible in theory that you can just sort of instantly create a brand and produce it all over the country. The actual reality is that these sort of fast food companies that you're competing with, right, Raising Cane's, things like that, they have spent decades developing these super, Chick-fil-A has developed these super sophisticated supply chains to deliver the perfect meal every time. And Mr. Beast has a great, brand with his demo, but the idea that it's competing with Chick-fil-A is really tough, right?
Did you see Mr. Beast on Flagrant 2? Do you know that podcast?
What is that?
Andrew, why am I blanking on his name? He was on this comedy podcast, and they play this prank on him where they're like, hey, we got some Mr. Beast burgers here. Let's all have them. And they open it up, and they'd replace them with Big Macs from McDonald's. And they're just like, oh, this looks exactly like a Big Mac. And they say that there's like some song that was popular with Big Macs back in the day. It's like sesame seed bun and like the, cheese and spread or whatever. And they're like, this looks a lot like a Big Mac, Mr. Beast. Like, what's going on
Wow, they
here?
really put him on the spot.
And he kind of didn't get it for a while. And he's
he
like,
probably had to
like,
play along with it.
You're like pranking me, right? And it was very funny.
That's amazing.
Anyway,
to be honest, I wouldn't know. I wouldn't be able to tell the difference.
Yeah, I mean, I think the Big Mac has an extra slice of bread in the middle, so he should be pretty obvious. But and of course, like he should know if it's his product. But anyway, people were having fun with it. But overall, I think he's kind of pivoted through that. Spent less time with the things that are underperforming, spent more time with the things that are performing. And obviously, the Amazon show, even if he lost money on it, it probably raised his profile nationally.
His audience on YouTube was basically maxed out, right?
Yeah, I mean,
it's hard to.
You say that, and yet it's like every couple months he's celebrating. Like now I'm at 400 million subscribers. Now I'm at 500 million subscribers. It's like he really does seem to be able to just
his TAM
continue
his TAM is probably less than Facebook, right?
Yeah, I mean, it's
from
the,
a user,
it's the same thing that you see with like CNBC, where CNBC just does not have a younger audience. And so if he wants to expand the audience, going into more reality TV style, older crowd that's just tuning in on.
Just being on America's home screen. Amazon Prime is the dominant TV
and he is like,
screen in America.
He's a generational game show host. And there's no reason why you wouldn't see him develop reality TV shows, co-host them, host them, or develop game shows. And the next, Who Wants to Be a Millionaire? I remember that being like a really, really popular. Jeopardy is a game show that's, it's a little bit less gimmicky, but that show has a really enduring value, has had a number of hosts. And you could see him developing something like that captures both the online audience, which is future and growing, obviously, but still goes after the old audience that's just tuning in every night.
Yeah, the question is, at a $5 billion valuation, is that a company that, the idea behind Mr. Beast raising for this holdco is that he will take the company public at some day. None of these investors would be plowing, potentially $1 billion into the business if there wasn't a path to liquidity. And I just don't see there being an acquirer that's not the public markets, right? And the question is, that stock has very real meme potential of like, you have this younger generation of fans that just want to be a part and feel like they're an owner of the Mr. Beast world. At the same time though, looking down into these, he's got CPG companies that are that we don't even know if they're profitable. So they account for 400 million. There's $400 million of revenue across the portfolio. We don't know if they're actually producing any sort of actual earnings. And then the production side of the business, unclear what the margin looks like on that. And over time, he's going to have to launch many, many, many more businesses. So investors that are investing at $5 billion are probably thinking this company, this group's going to go public. and we're going to have to launch a lot of other companies to sort of even grow into that $5 billion
It's
valuation.
a very different corporate structure, because you could totally see Mr. Beast LLC, the production company, going and getting acquired by Amazon, Hulu, Netflix, Disney even.
Yeah.
Any of those could pick that up. Do those companies want also a CPG company? And Feastables, natural home at Nestle, natural home at Unilever, right? But does Unilever also want Mr. Beast LLC? So I wouldn't be surprised if you see him launch a company, scale it, use his platform, his production company, as the go-to-market strategy, the initial marketing. And then at a certain point, it's like, hey, look, Feastables has really saturated our core market of Mr. Beast fans. Now it's Super Bowl ad time. Let's just hand it over to Nestle, take that cash back into the business, and then do an even bigger stunt, more content, and then a new product. And then just keep doing that. He's been talking about getting into mobile games, and we've talked about him getting into a VPN or something software, high margin. We'll see where it goes, but it's a fascinating story. Anyway, let's move on to an interesting question from Yun Yu Lee. Says, what happened to all of those companies that raised $500 million to train a foundation model for coding? Did they all just get mogged by Claude? Mogged by Claude is a funny phrase. Claude. I'm genuinely curious. For what it's worth, I don't see Cognition Labs, Cursor, Windsurf, Bolt.new using anything other than Claude or GPT, maybe with the rare R1 citing. And so, there's this debate
a couple
over,
of these companies,
do you train it yourself or
there's
not?
There's Magic AI,
Yep.
and then there's Poolside AI. Poolside was started by, I think it was one of the...
Isn't Poolside a reference to the Poolside PMs?
I don't know. What's the Poolside?
Oh, you don't remember that viral video of the product managers saying they're remote working during COVID, and it's these two girls and they're at the pool and they're like, day in the life of a product manager. Here's what I do at my job. Well, I check in with the engineers and make sure that they're doing the tickets, and everyone. It's super viral.
Okay,
I think that's the reference for Poolside. I don't know, maybe not, but I think the idea is like, you use this Poolside AI thing, and then you can be at the pool hanging out, which is just hilarious to me. And I love the brand, but who knows if it makes sense to train a model for $500 million.
We've talked about this in the past. So a little backstory on Poolside. So Jason Warner is this co-founder and CEO of Poolside. Was previously had a illustrious career. Was the CTO of GitHub. And he was the VP of engineering at Heroku. And he was also managing director at Redpoint Ventures. So it makes sense that when he starts a new company that raises obscene amount of money. There's two strategies in AI that we've seen to date. There's the ultra public sort of compete for attention on the timeline, which many of the foundation models have taken, and then there's the strategy of SSI, which is we're going to raise a bunch of money, but that's when you'll hear about us, and otherwise we're just sort of shooting for ASI. It's totally possible that these companies like Poolside and Magical, which is backed by Nat Friedman and Daniel Gross,
another GitHub guy. They're both in the two different companies.
Absolute dogs. It's totally possible that they decided, hey, there's this bloodbath on the timeline for attention. Let's focus on just core traction. And there's other approaches. If you have $500 million, you could spend tens of millions of dollars a year on direct sales, and it could be a lot more under the radar. But it is a very interesting call out that when you think about all these AI coding tools are using Claude, right? That is the preferred LLM under the hood. So credit to Claude for staying so competitive despite it not even necessarily being their core focus.
I need to do a deep dive on GitHub Copilot. Like, was GitHub Copilot a custom trained LLM, or was it built on top of GPT-3? I think it might have been built on GPT-3, but you could imagine that would color, like the GitHub experience could color how you think the market will evolve. Because if they're building Copilot, and these two guys both have real deep insights into what's going on at GitHub, and they're seeing this and they're saying, hey, it makes sense to train a custom model just for code, then makes sense to double down on that. At the same time, there's a lot of people in AI who believe that, I talked to one guy, actually the guy from Etched, he was saying that, I was like, how do you think like the humanoid thing plays out? Like, is it important to just include all human knowledge in those training, in those foundation models as well? And he was like, literally, yes. Like, I think that adding the corpus of every book ever written will help a humanoid walk. And I was like, that's an interesting take. But like, cool. There's this idea that like, yes, Claude, like in order to be a good programmer, should also understand every single language and every single philosophy textbook and every single history textbook, even though it doesn't feel like it applies all.
It's the same exact thing for any career path, if you have a bunch of knowledge from totally unrelated subjects,
Yep.
it can oftentimes allow you to be better at that one specific thing.
Exactly.
And so I think there's a real case for that. But all that being said, in the same way that there's 20 different consumer LLM sort of like chat apps, there's 20 plus heavily funded AI coding products, and they won't all make it. There will be multiple winners because these aren't. It's not obvious yet that these are sort of winner take all markets, right?
But I say let them cook. I say good luck to them. Hopefully it works out. Hopefully we get some cool products. I'd love to see it. Anyway, let's move on to Levels.io. He says, I've spent probably hundreds of dollars on Microsoft Flight Simulator 2020, and every time I load it, I'm stuck downloading new 10 gig updates, and it takes me 15 minutes before I can even fly. With my game, at least I can just fly immediately without updates. And so Levels.io is an indie hacker. He's been on Lex Fridman's show, very popular on X.
Very popular about his wins, but also his failures. He's launched, I think, 100 plus products, many of which have flopped, but many of which have done very well.
Very cool.
And his general ethos is just take tons and tons of shots on goal. And he's bucked the venture train. He's very outspoken in that he thinks venture is silly, and at times it is, but he's managed to create a bunch of really cool products. Especially more recently, I think a few years ago was focused on remote work, so we had a bunch of products related to that.
What was it called? Like
Nomad List.
Nomad List. That's it. Nomad List.
Which is cool. He was sort of living that sort of digital nomad lifestyle that was, I was never big in that world, but it became very popular. And then now he's pivoted into AI. He does some stuff in image generation, which is really cool. And then I'm excited to see what he's doing in flight. He's created this sort of flight simulator that almost feels Minecraft-esque. And did you ever do flight simulators growing up?
Not really. A little bit.
I used to do flight lessons, and it was a fun way. I had the full rig, everything strapped up to my desk, and the yoke and everything. I was big into that world.
Nice.
And so this is funny. This guy Gabriel is pissed off that Levels is monetizing his game that he released for free. So he releases his game. He says you can play it, and then he adds these upsells where if you want to buy like a F-15 in his game, you got to pay $30. And Gabriel says, I make games for a living. Personally, I wasn't bothered until he added a $30 microtransaction.
It's not really a microtransaction. That's
more of a
macro transaction. But yeah,
amazing.
I mean, it's fun. It's a good demo of him being able to build basically a game, with a bunch of AI coding tools, and he's building in public, but then still driving a bunch of attention. I think Elon quote tweeted his announcement video, and he did a great job of taking the product he produced, and instead of just saying, hey, go check this out, here's a link, he posted a video to really give you full context. Went viral. Elon quote tweeted it. I'm sure a lot of people found it. A lot of people downloaded it or just opened the web browser, started playing around. If they liked it, they pay $30. He gets to make a little money. It's great. And what should he do with all that money he's making? He should, of course, buy a Vacheron Constantin watch. I was in West Hollywood, Beverly Hills, going to a business meeting this morning. I should have been wearing this watch because everyone at breakfast was in absolute hitters. But I love that Vacheron's running this ad campaign called The Quest, and they are on the back of the Economist this week.
Full court press.
Say 270 years of doing better if possible. And that is always possible. In 1755 in Geneva, a quest begins, a quest for excellence in high watchmaking, a quest of passion, perseverance, and mastery, a quest to do better if possible. And that is always possible, the quest that never ends. Vacheron Constantin celebrates seeking excellence for 270 years. They're celebrating their 270th anniversary with a big ad campaign.
So just to give people some context, Vacheron was started roughly 20 years before America.
Yeah.
Which is pretty difficult to fathom.
It's wild.
So this single watch brand predates America by 20 years. And it's important for people to know that they can go on Bezel today and see almost the entire catalog.
They got a bunch of stuff on there.
They got a bunch of stuff on there.
There's a
but we have a thesis.
Too?
We should put it on the record. We have a thesis that Vacheron, it's the least well-known Holy Trinity watch brand. When people, even if you just said holy trinity to somebody that wasn't super familiar with watches. They would think Rolex, AP, Patek.
Yep.
But it's actually Vacheron, AP, Patek, or
That's
Patek.
correct. Yeah.
I think that this brand is about to go on a generational run. You just picked one up.
Yep.
I've been looking at a few myself, and it's a sort of undiscovered holy trinity brand.
Yep.
And the world is seems to be responding now. They have the new 222, which
it's fantastic.
I have my eye on.
Yep.
If I can get my hands on it.
And they haven't really overextended in the way the other holy trinity companies have.
Yeah, you have
less
Patek
stunts.
coming out with a Cubitus, terrible press run, terrible
Very
reactions
controversial
broadly.
watch.
Probably going to get discontinued. Who knows?
I think potentially underrated, but continue.
For sure.
AP's going kind of crazy too.
Just massively overextended, kind of pissing off a lot of core watch enthusiasts by these crazy sort of DJ partnerships, which may end up being smart, but following more of a LVMH style playbook.
Let's move on to Jonathan Wasserstrom. He says, I need some liquidity so I can take all of that liquidity and put it back into a different, equally, if not more illiquid new deal. I love it.
Jonathan's a buddy. He started a commercial real estate marketplace back in the day. So he's a founder. Now does a bunch of venture stuff. Has a pretty active syndicate on AngelList. We did a deal together last year, but this resonated with me. My entire life has been, working in illiquid private markets, getting some liquidity, tripling down into the next thing, and just doing that. And I'm sure I will be doing that for the rest of my life.
That's the game.
And I love it. So you may as well just say it how it is, which Jonathan says very eloquently.
But if you got a bunch of illiquid assets, you got to lever up. You got to take out some debt against them and then roll that into something else.
Yeah. Leverage, baby.
Let's move on to Sam Parr with an absolute banger. It's at 16K likes. I saw this and was like, this is so good.
Wait, we don't have the ability to play it.
We can't play the video.
We got to get videos.
We will figure that out. We had a brief run.
Videos working.
But it's a fantastic meme of Sam Sulek photoshopped into a board meeting talking about his leg day in granular detail. Sam says it's the best meme he saw in the last 7 days, hands down. And
That's
I agree.
saying a lot.
I saved it to my phone because it's so funny. I think I could actually maybe just play the audio for everyone here.
Yeah, do
Let's
that.
see.
Legs pumped. Holy shit, veiny as well. I mean, pumped, veiny, fatigued. What other descriptors are there of a good lift? But I'll make this quick because I gotta get some rest ASAP. The last thing I want to do is wreck my sleep schedule. But you tell me, man. I mean, that's a fucking pump for sure. I've kind of lost a little bit of the striations kind of on this side. Unpumped. There's a ton of fancy pants lines in here. But this is way more swollen than I need to be happy with.
Oh, it's so good.
Amazing.
I love Sam Sulek. I really hope he becomes a
sounds
Terminator.
like a fish tank.
Maybe. I don't know. He just has his own little tone of voice, but what a fantastic influencer. He's been on a historic run, and good luck to him in the Arnold Classic coming up. He's going for his IFBB Pro card.
We got to stream that.
Yeah. And I think it could set off a huge wave of IFBB attempts in the Silicon Valley world. A lot of capital allocators getting into bodybuilding. Keith Raboy was early with the berries thing, popularizing working out. The next logical step, become a mass monster, go for the IFBB Pro card.
We've been working on it. Speaking of optimization, it's official. Go to the next post. You can now track Blake and Patty. They're in the cage. You can track their productivity live. So somebody was inspired by Optify, the YC sort of sweatshop SaaS company that went viral. Or was it Monday? I think it was Monday.
Or weekend or something.
And they basically rebuilt the exact product. So leveraging the stream, it takes live footage from the stream. And then tracks when they're seated at their desk actually working versus off doing other things. So you can pull this up. It's pmf.die.xyz. They got their own domain,
I love it.
hosted it, and you can you can see exactly when they're sleeping, like not on their desk. You can see how much sleep they're getting.
They built this so fast.
Yeah,
We need
to find the guy that did this and hire them.
I guess by at my real dev. So go give them a follow because they're going to build something fantastic soon. This is great. I love this like meme website, one-off, just simple demos. We've seen a bunch of people build stuff like this for the show, ad networks and automatic clipping
Tyler.
for us and stuff. There's so many cool things that people are doing. So you'll love to see this. And it's funny. This is the thing that like it could just be photoshopped a few years ago. You go back 30 years, Photoshop didn't even exist, right? You couldn't even make a meme. Now you can actually make the full website, make the full product, thanks to artificial intelligence for sure. It's great. I love it. Let's move on to Lewis Hamilton. He says, now's the time. He's on the cover of Time magazine. Congratulations to Lewis Hamilton.
What
horsepower.
a fit.
Now at Ferrari, Lewis Hamilton races to claim his place as F1's greatest. Certainly hope it happens. He's a phenomenal driver to watch.
No, it's going to be very tough, right? Ferraris are known for their lack of reliability.
Yep.
And if there's one thing that helps in F1, it's a reliable, racing.
I don't know how real that meme is, but I got into F1 for a couple seasons and I was like, okay, yeah, I know Ferraris are unreliable. And then I saw Charles Leclerc like breaking down all the time. And I was like, how did that translate to the F1 team? You'd think it'd be like maybe it would apply to one, but not the other. But it really does seem like it's a thing across the board, and it's got to be extremely frustrating if you're a driver. But good luck to him. Hopefully Ferrari irons it out. Has a great car this year.
Yeah, they're doing testing right now.
Fantastic.
In Sakir.
Yeah.
And I'm excited to see the season.
It could be the downfall of this show. People complain about other podcasts pivoting into pure politics, staying away from technology and business and markets. We like to stay focused on technology and business. We slip into some other categories every once in a while. But if the show really goes down the hill, I think it's going to become an F1 podcast. We'll only be talking about racing and cars the whole time. So hold us accountable if we do that. Get us back on the topic. Keep it tech and business, guys. Anyway, should we close out with Balaji? Balaji has an announcement about Biograph, the world's most advanced preventative health and diagnostics clinic designed to drive meaningful advances in health span and lifespan. Balaji says, what's wrong with you? You don't know. You don't know if you're quietly sick. You don't know if there's a creeping time bomb in your body, one that might be detected and prevented by a simple test, but you're busy. You can't spend time worrying about this stuff. Ideally, you just want to get periodically scanned by a set of machines, have them determine what's wrong, if anything, and then dispatch treatment accordingly. That's why Peter Attia and his friend John Herring founded Biograph, and it's why Balaji became one of their first investors. The product packages just about every useful biomedical test into a single battery, from blood work to EKGs, from CT scanning to whole body MRI. It integrates all these measurements in an app and tracks them across time, giving a comprehensive overview of known risks for cancer, heart disease, metabolic disease, neurological issues, sleep disorders, and more. It schedules you for a recurring checkup every 6 months and uses both basic baselining and advanced AI to determine whether your results are normal. I'm sure that Elizabeth Holmes is crying in prison, thinking that she should have built this instead. Use off-the-shelf hardware.
We don't know if she's using, cutlery from the kitchen to assemble her own chips and develop her own machine.
She's like, give me all the shivs. I'm building a new MRI. She's collecting. Why does she have so many illegal cell phones in cell block 17? Yeah. Oh, well, it's because she's developing an EKG and a CT scanner.
Yeah,
that's
why. This is cool. It makes sense to combine all of these technologies, and if there's one thing people value, it's their life. So I can imagine that people would pay a lot to get access to this. And there's so many cool things you can, do with this data. You can imagine that life insurance companies would, one day ask their clients, like if you've ever gotten life insurance, they'll send somebody out to, do tests on you, and you can imagine, life insurance being like, cool, we're happy to insure you, but get this test first so that we can set your rate, right? Yep. And so very cool application of the tech, and it's already seen, people catch early onset, cancer and things like that through blood testing, biomarkers all the time. So I'm excited about. I hate when a company like this goes live and I didn't hear about it until it went live because it means I'm not invested in it. But very cool to see Peter Attia launch this, and it's cool because Peter Attia is historically, you could email him and sign up to be a client or a patient of his, but it was something in the range of $200K a year. So it's completely unattainable for most people. And even with that kind of pricing, there'd be a really long waiting list. You'd see him a couple times a year and he'd give you advice. And so he's going to be able to offer a lot of the value of his service for a fraction of the cost, I imagine. You can imagine something like this costing $5,000 a year and getting a lot of the value of what Peter provides in terms of longevity from that.
Let's get Sam Sulek in there. I want to know his biomarkers because I want the same biomarkers.
That's true.
And that's our show. Thanks for watching.
Real quick,
What you got?
some live breaking news.
hit me.
OpenAI launched a
4.5?
new product, 4.5.
Okay.
Today, we're releasing a research preview of GPT-4.5, our largest and best model for chat yet. So again, we've talked about the roller coaster, the LLM roller coaster. We're all on it. We're all riding it, whether you like it or not. And, Claude had its moment earlier this week. XAI had its moment last week.
Claude,
DeepSeek had
Grok
its moment.
3 over the weekend.
This is why Lulu's advice of just launch, because you're not, the best case scenario is you kind of own the spotlight for a few days.
Did OpenAI even do like a video for this?
They did a live stream.
Okay.
Not on X.
Okay.
And then they've posted a handful of videos.
Okay.
And it's interesting because I wonder how much Elon is nerfing their reach. He might actually be a little wary to do that, given how many.
He might be amplifying it with the crying emoji.
Yeah.
Who knows?
Yeah.
He gets in there.
Yeah, saying scam
Reply
quote tweet
something.
with a scam.
Yeah. I mean, attention is attention.
It says rolling out now to all ChatGPT Pro users, and so we should go and try it out and get our reactions tomorrow.
Yeah, we'll break it down tomorrow. I'm sure there'll be a bunch of good analysis and we can test drive it. Oh, I got 4.5 right here.
Ask it to tell you how many R's are in strawberry.
It's just like 10.
4,450.
Just like, shut up, actually. I don't want to hear any of your joke prompts anymore. I'm sick of you, human.
Yeah.
Log off. Touch grass.
I have levels of intelligence that you couldn't even, experience.
Get out of here. Anyway, we're getting out of here. Thank you. Leave us 5 stars on Apple Podcasts and Spotify. Leave us a review. Put an ad for a company you work for, company you started, company you just love in the review. We'll read it on the show. And that's our show for today. We'll be back tomorrow. We'll see you then. Have a great day, everyone.
Thank you.
Bye.